Hello everyone. Let us start with a quick sound check. If I'm audible, just type a yes. A quick yes will tell us that you are able to hear me. So awesome. I've got many confirmations. So thank you everyone. Okay. So welcome to Elon Markets webinar series. I'm your host Vineet Patavari, co-founder and CEO Elon Markets and Stockage. As you know, it's our mission to simplify financial markets. And with this objective, we always try to bring the best brains in the financial markets for our participants. This special webinar on the topic, how to analyze derivatives data for identification of stock trend, is also part of offerings in Stockage Club. Welcome all Stockage Club members and all other market enthusiasts who has joined us today. You know, today our trainer is a very exciting personality, our own Mr. Vivek Bajaj. Before handing it over to him to give you a quick introduction about himself and then take you through this awesome presentation which he has for you, I will just set quick rules for this webinar to make it super effective. Okay, for the listeners, during the presentation, you might have questions which you can post in the question panel. The questions will be answered by Vivek at the end of the presentation. That is, after 2.5 hours approximately of presentation, he will take questions. So you can keep submitting your questions and he will see it at the end. All the questions submitted till 5:30, so 6:30, till 6:30 will be answered today, and post that we will try to answer it over email one-to-one by Wednesday next week. We'll also share a feedback link at the end of the session. So we request everyone not to leave the session in between or close the window because at the end of the session, you will automatically get a feedback form. Please fill that feedback form because your feedback helps us in continuously improving ourselves. Another very important thing in the panel, in your panel, you see a handout thing from where you can download this presentation. So with this, the rules are set and you will get the recording by Monday end of the day of this session. So all of you, please don't worry if you are logged out or if there is any problem in between, because you will get the recording by Monday end of the day. And if there is any sound problem, please exit and enter again. Don't panic. Once you will enter again, you will be able to hear the sound if there is no problem with your audio system. So that's about it. The rules are set. Now I hand it over to Vivek to take this forward. Vivek, please start with a brief introduction of yours and then you can take it forward, please.
All right, Vineet, thank you so much. Quick sound check. Just give me a confirmation, Vineet. Is it I'm audible to everyone? Super.
Yeah.
Thank you. So great. So I've been waiting for this session for long now, and this topic is very close to my heart because I've been a derivative trader for almost 15 years. A brief background about how my career has progressed and what benefit you can derive from the knowledge which I'm going to share with you. So I started as a trader in 2006. We started into commodities and then we progressed to currency, equity. So we ended up creating one of the largest prop trading desks in India. So today, as on date, as we talk, we have almost 150 traders full-time trading the market. And also, we went on to create one of the largest algo trading desks in India. So derivative has always been my passion, has always been very close to my heart. And this 3 hours where we're going to be together, and even post after these 3 hours when we interact probably one-to-one through email, I'm going to share my whatever understanding I have garnered over the last 15 years with respect to derivatives. And I will try to bring in more wisdom into the learning because markets, I always believe, is more about EQ and less about IQ. Where IQ would be definitely covered, but EQ has to be covered over a period of time. And Elon Markets, Stockage, and these initiatives are essentially meant to empower you guys with the right EQ plus IQ to participate in the market. Now, derivatives have been in market for almost 17 years now. It started in 2001, and it has come long way. In equity segment particularly, we have seen a lot of innovation which has happened. Every 2 years, 3 years, there is a new set of derivative product which is available to be decoded and traded nicely. Unfortunately, in commodities, the evolution has not happened, but the good news is from 1st of October, you have more exchanges now coming into commodities. I don't know how many of you know this, but NSE and BSE, they are starting their commodities division from 1st of October. And we have recently seen options contract being launched in commodities. And eventually we'll have more products like indices trading into commodities as well. So some really exciting times ahead as far as derivative trading is concerned, because so far we all have been focused on only equity, but hopefully we'll get a robust commodities derivative market with multivariate products. And obviously currency is there available to us since 2008 to find out opportunities to trade in that segment. Now, derivatives analytics. Let me come to the presentation straight away because time is limited and I have so much to share with you. When I started building up my derivative desk, the first thing which I wanted was to decode the data. Now, there is a lot of data available on exchange website, and until you learn the art of decoding the data, you are essentially not doing any homework for your next day. Fortunately, last 10 years, lot of softwares have come into the market, and those software, each software is satisfying a particular need of a user. But I'm an old school guy, and I always believe that the more you do it hands-on, the better the idea gets registered into your mind. You know, remember when during our school days, when we used to study, and I'm sure every one of you has experienced this, that we used to write notes. The reason why we used to write notes is because scientifically it has been proved that there is a very strong coordination between your finger and your mind and your brain. So my idea of this session today is to help you create your own analytic platform or framework, which will be your own framework, and you don't just depend on any other tool as such. However, Stockage is the tool which we have developed, which is clearly out of the experience of trading which we had over a period of years. And there are certain cutting edge features in Stockage which we will be showing it to you, which is an outcome of our experience of so many years of participating in the market. But first thing first, how do I help you to create your own Excel sheet? How do I help you to garner all the data relevant for you to understand derivatives or to track the stocks, derivatives, and then try to figure out if you can make sense of all the data available in your Excel sheet. All right, so with the objective of our discussion clear, let's proceed. I'm going to use my PPT and I'm going to use an Excel sheet in the middle. This session is going to be more practical, hands-on. What I expect from you is please concentrate on what I'm going to share right now. This video anyways is getting recorded. You already have that PPT with you. You will get the Excel sheet also, which we will create and which I have already created. So don't worry about the supplementary material. In case you still miss something or you want something from us, you know we are one of the
Screen is visible to you.
Okay, yeah. So in case we miss anything which you don't get, then obviously you can send us an email and my support team is efficient enough to answer all your queries. Now, just Vineet said that maybe I do a quick check of the screen. So now that you guys can hear me, can you see my screen as well? My screen is first slide of my presentation, which talks about how to analyze derivative data for identification of stock trend. So can all of you see my screen? Okay, great, fantastic. So let's take it to the next level. So the agenda for today is why derivative analytics, the classification of various strategies which you can deploy in the market. You know, when I send an email to everyone informing about the objective of the discussion. We got feedback from some people that if you can touch a bit of technical also in this discussion. I'm happy to touch the technical, so we'll cover a bit of trend and swings. We're going to cover some basic derivative concepts, some data points which are relevant for you to understand derivatives in totality. And the most important thing is, how do you create your own Excel sheet? So there are some of you who replied back to that email and said that, so what are the various tools which are available in the market? Well, to solve that question, to answer that question, we thought that why don't we give you that Excel sheet and help you to create that Excel sheet yourself and create essentially the tool for yourself. Now, the application part will be covered by showcasing you how to identify stocks through those data points and how do we trade those stocks, because derivative process of analyzing the derivative data can be understood, and maybe you identify that stock, but then how do I trade those stocks? What should be my typical entry and exit point? Is there any model which I want to share with you? That we will cover towards the end of the presentation. All right. Now, for some of you who have been our participant in various initiatives, be it workshops or be it Stockage Club, etc., there may be certain concepts which may be repetitive for you. Don't mind, you just go through everything which we are discussing again, because it's always helpful to repeat things and look back things from a different perspective. All right. Now, what are the various forms of analysis we all know? The classic form of analysis we have been seeing and we know we have studied in various books is the fundamental analysis and the technical analysis. Now, fundamental analysis in the crude form is, you basically try to find out various factors that influence the price of an asset. And that asset can be equity, it can be commodities, it can be any asset whose price has to be devised. Now, the factors typically would be a demand factor or a supply factor. If the demand factor is more prominent and if there is more demand for that an asset, then obviously the price of that asset will go up, as the simple law of demand suggests. When a fundamental analyst looks at the pricing of an asset, he essentially, from an equity perspective, he essentially tries to find out the demand and supply of the product which the company is making. After the demand and supply of the product is estimated, which is essentially you are estimating the revenue and the cost associated with that company, you try to figure out the performance of that company. So fundamental analysis from a stock market perspective is typically where you try to find out from a financials perspective how the business performance of the company is doing. And if you believe that there is a disconnect between expected business performance and expected business performance by the market, then there is a difference in fair value and the actual value of the price of the equity. To put it very simple, Reliance today is trading at around 1140, right? Now, market is estimating certain performance of Reliance as a company or as a group in years to come. That estimation, if it is that estimation, when it is considered at the current value, that revenue estimation is market expectation. But suppose you as an analyst, if you can estimate a better number, better financial performance from Reliance in years to come, then obviously you would like to believe that the price which Reliance is traded right now is underpriced. So fundamental analyst actually has to estimate, mark my word, a fundamental analyst has to estimate the financial performance of a company. That is a daunting task. Let's take an example of currency. When a fundamental analyst says that a currency USD INR will go to 72, the fundamental analyst has to estimate the demand and supply factor of both US dollar as well as INR. Now, from a macroeconomic perspective, you can think predicting what is going to be the future fundamental estimates of both USD INR, it's an extremely complex thing to do, because there can be multiple factors which actually may not be estimated as well. For example, unemployment rate, inflation rate, interest rate, etc. These are certain macroeconomic factors which can influence the demand and supply factor for USD INR. So fundamental analysis actually goes to the grassroots level of estimates of the factors influencing that asset class. Technical analysis, as a couple of us must have studied and we typically follow that a lot, is estimating the crowd behavior. And the crowd behavior is clearly reflected out of the demand and supply associated with price of that asset. A typical assumption associated with technical analysis is that the price is correct because it's an equilibrium price where the demand and supply factor as on today is well priced. Okay. Now, obviously, when you're talking about crowd behavior is very dynamic in nature. Crowd cannot behave in a linear fashion. मतलब crowd कभी भी इस तरह से behave नहीं करेगा. Because of our natural tendency, we will have flow of emotions around this. So this typically should be the behavior of a crowd. Now, technical analysis tries to capture the probable behavior of a crowd in an uptrend or in a downtrend. We'll discuss how this happens through various swing strategies. The third form of analysis, which has come very prominently for the last 5 years, is the sentiment analysis. So fundamental and technical has a role to play when it comes to demand and supply estimate of a product or the demand and supply estimate of the asset class price. Sentiment is actually trying to measure what crowd is thinking with respect to emotions involved with that stock. You know, there's a very thin line of difference between price and emotions. A crowd may think in a particular way. There may be emotions attached to a particular instrument, but that emotion may not get executed into the price immediately. So these days, sentiment analytics has become a kind of a modern way of predicting what people are thinking about this stock. May not executed yet, but what people are thinking about this stock. In a very crude way, just take an example that in Twitter, people are talking good things about a stock or a company. That's a form of a sentiment. And if there are more people talking good things about a company, very likely that company's stock price will witness some kind of a buying activity. It's in a very crude way I'm saying. So the world today globally, as far as quantitative trading is concerned, as far as systematic rule-based trading is concerned, the world is moving from discretionary price actions to more of sentiment analytics, where they're trying to predict what the market is thinking about that stock, not necessary that the market has acted into the stock. The other form of sentiment analytics is the strong hand analysis. Friends, we all know that ultimately in stock market, the bigger guys with lot of capital, they are the guys who will dominate the market. Whether we like it or not, every stock has a set of big players who are kind of managing that stock. I'm very careful here. I don't want to use the term operator because that's not used in a very nice manner in India. But globally, every stock has a set of managers or operator who work on that stock only, who are actively involved with the ecosystem of that stock. Now, if you as a retail participant, if you want to make money off the market, you cannot make money if you are against those operators or if you are against those managers of that stock. So one of the way to find out that you are on the right path is to see what bigger guys are doing in the market. If bigger guys are saying that this stock is in total control of bull, you better buy that stock first. If the bigger guys say that this stock is in total control of bears, you better sell that stock first. So derivative analytics is all about trying to figure out what kind of position is there in the market, whether that stock is in the control of bull or that stock is in the control of bear. All right. Are you guys with me? Maybe I'll keep on coming back to you with some responses so that, yeah, okay, great, thank you. Let me just quickly touch on to the few strategies which I believe works in the market and which are typically deployed in the market. If you classify these strategies, there are broadly 4 kind of market strategies one can be involved in. One is intraday, where your position at the end of the day is 0. Second is swing trading, where your position is carried between 2 days to 15 days. Third is medium term trading, where your position actually carries from 1 month to almost 6 months. That is almost covering 2 quarters of the company result performance. And long term is essentially 6 months and beyond. What are the parameters of entry and exit of these strategies? This we will see in the couple of slides. Now, an intraday trader typically work with a risk to reward ratio of 1:1.5. There are different kind of strategies which an intraday trader can deploy. The classic strategy which an active prop desk trader deploys in the market is scalping. Scalping is essentially you are trading with on every 4 or 5 ticks with a stop loss of 4 or 5 ticks. The idea is to be trading a lot. You trade maybe 1,000 lots in a day and you make profit in 600 lots, you make losses in 500 lots, and at the end of the day, you make certain money out of the whole day's trade. The second strategy is relative strength with the market. So in the morning, you come and you see whether that stock is showing any strength vis-a-vis the overall market. And you always try to buy that stock first because it has the propensity to buy, it has a propensity to show a strength vis-a-vis other stocks or other indices of the market. The third is the short-term price breakouts. I am a very strong believer of the simple strategy of price breakouts. I think the most effective thing which works in the market is price breakouts. And you don't have to resort to very, very high-end, exceptionally advanced features of stock price breakouts. You just have to focus on things like last week high-low, last month high-low, breaking the current month average price. These are certain important price points which are extremely important because most of the algos have incorporated these important price points as part of their algo strategies. Fourth is the option strategy. So you can actually deploy option strategies for intraday purpose, can be done for swing trading, and also can be medium term depending upon your objective of trading the options. You know, options itself deserves a lot of discussion because this topic is huge, right from foundation of Black-Scholes formula towards the end of high-end analytic strategies. I think options is something which deserves a lot of detailed discussion. So in this presentation today, I'm going to touch on options, but I'm not going to get into deep into options, Greeks particularly. And then you have event or economic data. So there are certain strategies which are extremely event driven. So you participate when the event is there. You have a clear risk reward ratio defined during the event. If your stop loss is hit, great. If your take profit is done after that event, great. So there are people who actually work on those specific strategies only. So because you all are retail traders, I'm presuming that you are not full-time prop traders. Because you all are retail traders trading with your hard-earned money with brokers, somewhere you have to define one area which you are going to use for trading in the market. So if you suppose define that I am going to be an intraday trader, then are you mentally prepared to sit in the market from 9:15 to 3:30? Or if suppose your existing occupation may not allow you to do that, can you define a specific strategy also in intraday? That okay, I want to be only an event-based trader, or I want to be only in a short-term breakout. I want to only play the short-term price breakout strategies, and that too only in a limited stocks. Or maybe I want to only be a bank nifty weekly expiry trader. So because you guys are not into full-time market, I'm presuming Somewhere you have to limit your strategy that this is going to be my universe of participating in the market. Swing trading, as I said, ranges from 2 days to 15 days. And typical classic strategies for swing is sector rotation, relative strength, option strategies, pair strategies, calendar strategies, and reversal stocks. All these strategies require different set of data, different set of parameters. Sector rotation is the flow of money from one sector to the other sector. How do you judge that? Relative strength is again the strength of a stock vis-a-vis same sector stock or vis-a-vis the overall index of the market. Option strategies, as I suggested, options you have to deeply get into geeks and find out the objective of an option strategy, whether you want to play a volatility or you want to play a theta, etc., etc. Pair strategy can be done in two different ways. One is you purely rely on the statistical pair where you try to figure out the mean reversion. And the second one is you try to see the strength of one stock vis-a-vis the other stock, which has a very high correlation with that stock. Now, pair strategies typically don't have stop loss. There you will have to carry your position. So for a retail trader, it's a very, very risky strategy to deploy. Calendar spread is you are essentially trying to trade the forward curve, the difference between two different expiries. And reversal stock is actually the most profitable strategy where you try to figure out when will a stock reverse in the trend, and that's the place where you actually can trade with a limited stop loss and think about a higher risk reward ratio, because when a stock reverses, there is a very high chances of aggressive movement in that stock on the counter direction. Guys, in this 4-5 slides, I just want to give you a perspective of various kind of strategies. This is nowhere related to derivatives, but I just thought that because I'm talking to you and I get an opportunity to discuss with you, I thought I will just touch on to these strategies and you try to figure out which one works best for you, and then you specialize in one specific strategy for at least some period of time. Medium term is again more from a perspective of fundamental, where you add some thematic ideas into your trading profile. It can be event theme, it can be sector theme, it can be quarterly result theme, it can be a merger trade, it can be a buyback trade. So typically these trades are open for a period of 4 months to 6 months, and when that theme is gone, you typically square up your position. Your risk reward ratio expectation should be very high vis-a-vis being an intraday trader when you are keeping your position open for a period of 3 months to 6 months. Long term is what we call it investment, and there are different category, different style of investment. A couple of ones which I have penned down here are value investing. We're trying to figure out if there is any value in the stock which the market has not seen yet. Cloning, where you are purely trying to clone the existing rockstar investors, not blindly. You're taking references of stocks from cloning and then strategize your own trades based on your fundamental model which you have evolved over a period of time. Then you have growth investing, where you try to invest in stocks where the industry itself is growing and that stock is growing much better than the industry. Then you have theme based. You want to trade for a specific theme. For example, GST can be a theme. For example, next year budget can be election can be a theme. And then you have turnaround stories where a lot of bad assets have been sold in the market, and then you can take an aggressive bet on those bad assets which are sold in the market. All right. So this was, just give you a perspective of various strategies available in the market for your practice purpose. Now let's get on to the our limited scope of today's discussion, which is how do you identify a trend in a stock using derivatives. So when you talk about trend, you have to understand the concept of swing. What is a swing? Typically a stock will always work in a swing, right? A swing is an idea which says that can you buy in the initial part of the swing and can you sell in the top of the swing? Okay. For example, let me show the graph. So this is a typical stage of a swing where a swing begins here, it matures, then it peaks here, and then there is a correction. So market typically will have these kind of activities. So there will be swing, there will be corrections, there will be swings on the downward side, there will be swings on the upward sides. So this one full swing is a big swing, and then you have different small swings as part of this big swings. So as a trader, what is your objective? Your objective is that can I buy here and sell here? You know, mark my pen, I'm not saying buy here and sell here, because it is not possible for us to buy at the bottom and sell at the top. But even if we buy here after confirmation of the swing, and if we can sell here after confirmation of the change in the swing, we still can make money from the market. All right. So as a swing trader, what do you need? You don't need understanding of fundamentals. You don't need the understanding of what kind of product the company is selling. You actually don't care the name of the company. The most important part of swing is to understand the money flow into that stock. And the money flow into that stock will clearly get reflected from the price chart, as well as the kind of open interest position or kind of positions which is getting built in that stock, both in cash market segment as well as in the derivative segment. What are the research tools available to understand this swing? You have technicals, you look at the price graph, and then you have derivatives which will help you to track what the bigger guys are doing in the market. Now we all have seen this, and this is the most simplest form of presentation of trend. A trend is when you are making higher high as well as higher lows in the market. This is an uptrend, and downtrend is when there is lower low and lower high in the market. That's the downtrend, correct? And swing is typically characterized as this is an upswing and this is a downswing in that stock. You know, how do you know that the trend has changed? And this I have taken from this nice small website called swingtradestocks.com. Pretty much good website to get a complete understanding of this full swing methodologies. So if you see, the classic way to know when the trend has changed is when the trend line is broken, and we're going to see some stocks which will give you a perspective of how do you identify how a trend line is broken. If a trend line is getting broken and there is a retest of that trend line, so if suppose this is a trend line and this is how the stock has been behaving, there is a trend line, and the trend line is say has been broken, and there is a retest of this trend line, and after again if the downfall is continued, this is a confirmation that the trend has changed and the price has started falling below the lower strata of the trend line. Okay, you know, this typical some price based technical tools, and friends, I'm very strong believer of price based tools, because I think if you can understand price, language of price, at some point of time the price itself should tell you that I'm going to fall. So focus more on simple technicals where you give lot of weightage to price. Don't get into too much of complex technical and get into too much of complex indicator driven trades, because indicators are good to gauge the momentum and oscillations, but eventually a price should be capable to communicate to you whether there is any significant change in the trend which you can expect from the price of that instrument. So things, these five are kind of my favorites, and I follow it religiously for my trading style. So you can look at Fibonacci. Fibonacci is the classic, the most natural form of technical analysis, where you actually try to find out levels of the stock movement the level which is in conjunction to the trend of that stock, and expect that there will be retracement as well as support of that stock price movement at these important Fibonacci ranges of that particular movement. Just for example, the stock Reliance Industries, it went up when it was trading at around 800. It went up from here. It made a rally from here to here. Withdraw Fibonacci. I think you'll get Fibonacci in almost all the softwares. You'll get it in the trading terminals of the broker. Once you draw the Fibonacci, you will automatically get the retracement levels, and there is a very high possibility of the stock reverting back from these very important support levels. Or I'm not saying that you blindly follow these levels. I'm saying that this can be one of the parameter to get the support and resistances, and if at a same price point you get multiple parameters getting satisfied, that's the price point where most likely the stock will take a support or a resistance. Guys, I'm going through the presentation in slightly aggressive pace because this presentation anyways will be available with you, so I'm not reading it text by text. I hope you are getting what I'm trying to say. In case you still feel that there is somewhere I need more clarity, or you need more clarity, then you can obviously keep on posting your queries on the query window. Okay, and my assumption is that you guys know basic derivatives, you guys know basic technical, so I'm not really putting too much effort in explaining you each and every technical indicators in detail right now. Support and resistance. Friends, I'm a very strong believer, as I said, of price, and the basic support and resistance for me is the most important thing. So holding on to the horizontal line and seeing whether the price is getting respected in the horizontal lines, I believe this is the most important piece of understanding what the market is perceiving the price to be. The strength of a buyer and the strength of the sellers will get clearly reflected when you draw a simple support and resistances line in a particular stock. See, for example, this was Yes Bank chart for January. See, there was a simple resistance line here, and the moment this resistance line crossed, there was an aggressive breakout in that stock, and the stock has not seen the levels of 310, 320 since then. Okay, now you have a other form of technical which helps you to find out the support and resistance is the channels, where you try to draw. So support and resistance in the previous avatar was straight lines. Now you try to find out if you have any channels, parallel channels in that stock, and the moment there is breakout away from the channel and it retests that channel breakout and still unable to cross it, there is a possibility that the stock will react opposite to the existing channel of that existing channel movement in that stock. See the channel which was there in Nifty. This is a long-term channel. Fourth is the simple moving average. The most simplest form of moving average indicator which you have seen, which you would actually can calculate on your own, is the 5-day and a 20-day moving average. 5-day moving average is essentially the average of last 5-day movements, the average of last 5-day closing price, and 20-day moving average is the average of last 20-day closing price. The moment 5-day moving average is trading above 20-day moving average, it's an indication that in short term, the buyers are in a strong command in that stock, and if 5-day moving average is trading below 20-day moving average, it's an indication of the sellers having a very strong command in that stock. See, I'm using very simple indicators just to figure out what price is trying to suggest to us. I'm not trying to use very complex indicators here, because price, to be very honest, is itself so complex. If you can build a relationship with the price, that's the best form of technical or a money management you can do for yourself when you are trading in the market. See, in this example, whenever there is a crossover between 5 and 20, there is a possibility of particular instrument reacting to the crossover. All right. This is an example of Lupin. This is a 60 minute chart. So you don't have to really only do a EOD 520. You can actually draw 520 for any duration chart. So the moment you have crossovers like these, typically market would react. I'm not saying that market will react every time. Because market don't react every time, there is something called stop loss. There is no harm if stop loss is getting hit. Trust me, my dear friends, your biggest friend in market is a stop loss. अगर stop loss hit होता है, उसको होने दीजिए, because if we are maintaining 1:1.5 or 2 as a risk reward ratio, even if stop loss is getting hit, we are still making money at the end of the day, at the end of the week, or at the end of the month. All right. The last indicator, which kind of you can say that it's a advanced indicator, but still it is derived out of the exponential moving average, is the MACD, which helps you to find out a momentum in a stock. If MACD is crossing the signal line, just like here, it is an indication of, again, the same thing where the short-term indication that the price will tend to go up because the momentum towards price going up has suddenly come into the picture. So MACD is nothing but it's a difference between 26-day exponential moving average and 12-day exponential moving average. Exponential moving average is different from simple moving average. In exponential moving average, the current price movement is given more weightage, whereas this in simple moving average, it is simple average of the price of the instrument. Okay. Some analysts, some traders, they tweak with this, they play with this, they consider they at times change 26 to 24, 28, 27. But my sincere advice is that even if it is 26 and 12, it doesn't make too much of difference. I mean, you can play with the number and find out the best fit for you, but it does not play too much of a difference because ultimately your money management, your risk management, your money management is the key to decide what trade should be executed at what point of time. That we'll discuss in the later part of presentation. So you see Tata Motor, whenever there is any major MACD crossovers, the price is expected to react. Now again I'm saying do not only trust MACD as an indicator to give you the right trade, but if you can do a combination of 2-3 indicators and all three combined together is trying to suggest a similar kind of an action in that stock, that's the time you have to execute the trade. So the idea of this presentation is not to make you a compulsive trader. Friends, we all are there in the market to ultimately make money. हम लोग market के अंदर में we are not here to spend our time. We are not here to kill our time. The ultimate objective of participating in the market is to make money. So don't be in a compulsion to trade a lot. Only trade when there is an opportunity to trade. There can be days, there can be hours when you don't have any trade open, which is fine. The best trader in the market is someone who is waiting for the right trade rather than compulsorily trading from morning to the evening. So focus on making yourself rich rather than making your broker or the government rich by paying STD to the respective party. This is one of the strategies which one of our faculty members has recommends, which is the 89 period exponential moving average. This is again a strategy which you guys, if you want, you can follow. What we do is we look at the 89 period exponential moving average on a daily chart in a particular stock. And typically, if the stock is trading above 89 period exponential moving, that means the stock is in an uptrend. That is our base case assumption. How do we trade? We then draw a 60-minute chart of that stock, draw the same 89 period exponential moving average, and if the stock is say in an uptrend and exponential moving average for 60-minute chart is also trading below the price, this is a time to buy with a stop loss of this, because it is the EOD chart is suggesting that the price is trading above the exponential moving average. You will always buy first. The moment the price is trading below the exponential moving average, you will not initiate a buy trade. You will only try to figure out opportunities where you can sell first in that stock. So basically, EOD chart is giving you a broader perspective of whether you want to buy or sell, and 60-minute chart is actually giving you trade. When EOD is saying buy, you will only generate a buy trade in 60-minute chart, and when EOD is saying sell, you will only generate a sell trade in that particular stock. Is this concept clear? Very simple concept. I don't think so there can be any confusion in this. See, for example, of Lupin, the daily chart suggested that's in a downtrend, and when you follow the 60-minute chart with same 89 period exponential moving average, you get enough opportunities to execute the sell trades. Why sell trades? Because the EOD chart was suggesting a downtrend in this particular stock. All right. So quickly, is this concept till this presentation? Is this concept fine? I can see that a lot of people are asking queries with respect to any specific stock, but we're going there. We're going there. We still have a lot of time together. Okay. Okay, I can see some of you mentioning that you can't hear me. I guess that's a problem with your multimedia. So you can probably log off and log in back again. Okay. No, I think it's fine. Most of the people, it's fine. Yeah. Okay. Parth. Okay. Parth is asking, can we explain the option chain? Yes, we will go to that Parth. Okay. Okay. Shivani, don't worry. This video will be available to you, so don't worry. Even if you miss it, that's not a problem, because what I have discussed till this moment, till this time, was more of a macro discussion where I was trying to bring in that trader psychology into the picture. Because the moment you get into hardcore data analysis, you become more logical oriented, but market does not always behave very logically. So somehow managing your EQ becomes as important as managing your IQ in the market. So till this moment of the presentation, my focus was to give you more of a trader psychology perspective of market. Now I'm going to talk about data, because ultimately data analysis is also important beyond understanding the trading psychology. So let's get along with the derivative data. You know, the most important data of market is the Bhav copy. Can I ask you how many of you actually do at the end of the day a Bhav copy analysis? Any one person who actually spend at least half an hour a day at the end of the day to look at the Bhav copy. And I'm presuming that a lot of you who are saying that no are derivatives trader or aspire to become a derivatives trader. My dear friends, if you want to become a full-time trader or if you want to trade derivatives, trust me, mark my words, it is the most difficult thing to do, because if you are not involved full-time into trading, you have people like us who are into the market full-time trading derivatives. It is very difficult to lose. It will be very difficult for you to make money from the market if you don't spend enough time in analyzing Bhav copy of the market. I can see there are a couple of people who are asking me stock specific questions. I would request them, we will get back on all the discussions, But right now, can we just limit ourselves to conceptual discussions and not focus on a specific stock? We will discuss stocks, there is no doubt about it, but can we just go with the flow and discuss concepts which we are talking right now? So let's try to find out what Bhav copy is, and let us try to decode the structure of a Bhav copy. So how do you get a Bhav copy? So let me take you to the website nscindia.com. So in nscindia.com, you have all reports here. So once you go to the home page, is something called all reports. In all reports, we have various kind of data available for your analytics purpose. Some data is daily reports, some are archives. That means you can see historical data, and some are monthly report. When I'm talking about Bhav copy, I'm essentially talking about the Bhav copy of cash market segment, the Bhav copy of derivative segment. Obviously, because derivatives, there are a lot of contracts which are traded in the market. This Bhav copy is pretty much an exhaustive Bhav copy for you to analyze the market. Now, let me show you the structure of Bhav copy. We'll spend around a couple of minutes in actually downloading a Bhav copy and analyzing a Bhav copy, particularly of derivative segment. So let us download a Bhav copy. So I've downloaded the Bhav copy. I'm getting a zip file. In that zip file, there is something called CSV file. Don't worry about the CSV file, because CSV file can be easily converted into Excel. Once you double click, you get this file, exhaustive file, as an Excel file. You can actually save this. So let me save this as an Excel workbook and give this a date of 2007. So I have saved this Excel as in my computer as a derivative Bhav copy. I've given a date of 20th of July. Okay, guys, I'm going very slow because what I want you to do is learn this whole art of analyzing a Bhav copy and then creating your own Excel at the end of the day. If you can spend half an hour or to 1 hour on a daily basis and analyzing this data on your own and not dependent on any other software for this basic analysis of data, I think you will be able to understand the market, comprehend the market in a much better manner. I know this is a very daunting task of doing the homework at the end of the day, but you go back to your school days and you know that how much importance homework used to be given to our overall study. Because if you don't do homework at the end of the day, eventually you are dependent on certain softwares, and just following a software will not give you that feel of the market or feel of the stock in which you are trading. Okay, Sumit, I know there are various toolkits available in the market, but Sumit, trust me, if you just follow a toolkit, somewhere you're limiting your exposure to only that particular toolkit. For example, Stockage itself is a toolkit, but I will still suggest that you please do your homework in an Excel sheet and take certain references from other toolkits as well. Okay, this Bhav copy, this is a format of a Bhav copy. If I filter this, so let me put a filter. For people who have no understanding of Excel, I'm going very slow because I want you guys to become very good in Excel. Because Excel is such an important tool for all of us to adapt in our life. What I've done is I've filtered and I see that a different category of instruments are here. I can sort basis of these category of instruments. Then you have different symbols. You can actually restrict your analysis to a specific symbol. Then you have different expiries available. So you can filter your analysis on the basis of expiry, strike price, option type, open, high, low, close, settle price, contracts traded. This means how many contracts were traded today in that particular underlying. Then you have value in lakhs. That means how many, what is the total quantum of trade which has happened in the market for that particular instrument. Then you have open interest. That means what are the quantum of shares or contracts which are outstanding in that particular contract. Then you have change in open interest, and you have timestamp that talks about today. That this is a VAR copy which belongs to today, which is 20th of July. The typical time of updating the VAR copy in the exchange site is around 5:30 to 6, because the timing of the market is getting extended. I don't know how many people know this, but most likely the timing of the market will be, equity market will also get extended to 11:30. So we don't know from 1st October what would be the timing of our copy update. Although we believe that there will be two different sessions in the market. One session will be till 3:30. The other session can start probably from 5 and it can go up to 11:30. So most likely the VAR copy associated with the morning session or the session till 3:30 will be available by 6 or 6:30 in the evening for your disposal to do your homework. So this is a structure of a VAR copy of derivatives. Now let us see the structure of VAR copy of cash segment. Now in cash segment, friends, if you look at the VAR copy only, you will get, so let me download the VAR copy of cash segment. So this is a VAR copy of cash segment. Let me open that file. So in cash segment, you get all the cash stocks which are traded, open, high, low, close, last traded price, previous closest price, total trade quantity traded, total trade value traded, timestamp is which is today, and total trades which has happened in that particular instrument. The important thing which is not mentioned in the cash, this particular section of cash VAR copy, is the delivery statistics. And in fact, someone did ask me this question in that window, that where do we get the delivery data? Because in a cash segment, the most important data, according to me, is the delivery data. Just like in futures, derivatives, open interest is the most important data. In cash segment, I would give lot of weightage to delivery data than to the volume traded data of the cash stock. So how do we get the delivery data? So I close this. I go to NSE website again. And in NSE website, in cash capital market, there is something called security-wise price volume data. Security-wise price, volume, and delivery position data. If I click here and I put any symbol, say for example, I put ACC and I see EQ of last one day. This is an Excel sheet which will give you, this is the output in the screen. You can click here to download their output in a CSV format. That's I download it and I click. I get the data. So this data has not just price and volume, but also the number, the delivery quantity and percentage of delivery to trade. These are two important data points for you to find out whether the bigger guys in the market, they are interested in taking delivery or giving delivery of that underlying in the market. If someone is interested in taking delivery, that means he believes that the price will go up. If someone is interested in giving delivery, he believes that the price will go down. How do you know whether someone is giving delivery or taking delivery? Because eventually in the market, if someone is giving delivery, someone is taking delivery. So how do you know whether the resourceful person is giving delivery or taking delivery? For that, you need to merge your price action with the delivery data to try to predict that someone resourceful has taken delivery or taken delivery of that underlying. All right. Any question with respect to VAR copy? Okay. 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 Yeah, so okay, so all the questions anyways we are going to cover, so don't worry. Okay. So benefit of Bhav copy. So now you understand the structure of Bhav copy. Now let's go to the next slide. What's the utility of the Bhav copy, right? That's the principal question. Now in Bhav copy you get certain data points. One of the data point which is important for us as a derivative trader is an open interest. Now what is an open interest? Open interest is, as the name suggests, the interest which is open in the market. When you say interest, that means either there can be a buyer's interest or a seller's interest. Let's take an example of what do you mean by an open interest of certain lots available in the market. Like when client A buys 2 future lot of TCS and client B sells 2 future lot of TCS, the total outstanding position, outstanding contracts in the market is 2 lots, right? Now if client B sells his position to client C, the number of outstanding positions still remains 2 because now A and C are essentially party to the contract. Because these are exchange traded contracts, A and C, they don't know each other. They only know the clearing corporation, which is in that case, if they are traded in NSE, clearing corporation, which is owned by NSE. So the counterparty of A is the clearing corporation and the counterparty of C is also the clearing corporation. Now suppose client D and client E have again initiated new trade of 5 contracts and there are 7 contracts now outstanding in the market. The 2 was earlier plus the 5 new which is getting initiated. So there are 7 contracts which are outstanding in the market. Now I suppose client C, which has sell position of 2 futures contract, they bought, and client A, they sold. So this 2 contract is getting nullified. So you have 7 minus 5, 7 minus 2, that means 5 contracts which are outstanding in the market. Now this is very simple, right? And for some of you it can be very mundane discussion. But you have to understand, how do we predict whether the position which is open in the market belongs to a buyer or belongs to a seller? Because logically, for every position which is open in the market, there is a buyer and there is a seller. Now, how do I predict whether buyer is a resourceful person or the seller is a resourceful person? That is the key analysis one has to do, and that is what we are going to discuss in a couple of slides from here. So just like open interest is important from your derivative perspective, as I said, volume and delivery is important from your cash market perspective. Because just like open interest helps you to know what kind of positions people are carrying at the end of the day, in case of cash market, delivery helps you to know what kind of position people want to carry in terms of taking the delivery or giving the delivery of that underlying. Okay. So, a number of contracts traded in the market, significance to be observed in case of technical breakouts. Comparing today's volume and delivery with last 5 days average volume is important. Why? Because maybe because of rain today, volume or delivery is not so much. And if you just compare the delivery changes vis-a-vis yesterday, then obviously you get a distorted picture. So always averaging out the delivery statistics for a comparison purpose is recommended. It works in tandem with other different derivative, both technicals as well as derivative analytics. Now this is the metrics which one has to really learn and adapt. The more you practice in the market keeping this metrics in mind, the better you will be able to comprehend the probable activity in that stock when there is increase or decrease in the open interest, as well as increase and decrease in the delivery. Okay, now let's discuss this metrics. So first is price is rising, that means the stock price has gone up. Delivery is rising, that means today the delivery in that stock in cash segment is higher than the delivery of last 5-day average. And open interest has also gone up. That means more people have increased their position in the derivatives contract of that particular stock. So price rising, delivery also rising, and OI has gone up. This is a clear indication that there is a very strong long position which has built into this stock. Possibility of a very, very bullish scenario because the long guys have entered the stock both in the cash segment as well as in the future segment. All right. The second case, price rising, delivery is also rising. That means in cash segment, the position has been built, but in open interest, the change in open interest vis-a-vis previous day is kind of flat. There is not much new position which has been built up in the future segment. This probably can be last leg of the long position because the guys who were playing long into that stock, they have not increased their bet into the future segment. So this has to be dealt as cautiously bullish for this particular stock. Third, price is rising, delivery is also rising, and open interest is falling. What do you mean by open interest falling? Open interest falling means someone has squared up their position. So when the price is rising and someone is squaring up the position, means there is a case of short covering. Because when the price goes up, someone is desperate to buy, and open interest is going down. That means someone is desperately wanted to buy and square up his position. That is a clear case of short covering. When there is aggressive short covering in the market, that is at the time when the stock price reacts. Normally prices will be much more volatile and much more aggressive when there is some kind of covering in the market, because covering is always associated with desperation, right? When you are building a position, you are not desperate, but when you are squaring up your position, you are much more desperate. So if you can catch the probable covering of a position in the early stage, you can get a very, very good move in a stock. It can be in a short covering or it can be in a long covering. In case of short covering, there is a case of bullishness only till the open interest is falling. When the open interest becomes flat and there is no further increase in open interest on the long side, probably the stock will rest there till a new open interest on the long side is getting built. A new rally will come into the price when there is a increase in bullish open interest in that particular stock. Okay, is this concept clear to everyone? So when the price is going up with open interest going up, it's a long position. When the price is going up with open interest going down, it's a short covering. Very simple concept. Great. Some variation of this concept is, and it takes a lot of practice to actually conclude these judgments when you actually do analysis of a couple of stocks on a daily basis. Then at some point of time you will be able to make a very clear judgment on these conclusions related to the change in open interest and price. So okay, where's my pen? How is not? Just a minute. Okay, this is a pen. So price rising, delivery is flat. That means in cash segment, not many people are taking delivery of that stock, but in derivative, people are building up their long position. That means there is a long position. I would like to play bullish, but because people are not taking delivery in cash market, I am not very hopeful of a very, very aggressive bullish in that stock. Probably when there is increase in delivery, I may actually think of a very aggressive bullish pattern in that stock. Then you have price rising, delivery is flat, and open interest is also flat. That means not many people are interested in that increase in price. And this is a typical case where operator is trying to show you that, and this is a place where your technical analysis will fail, because technical analysis typically will give you a bullish indication because the price has gone up. But on the back end, if you look at delivery and open interest, not many people has participated in that price going up on an end of the day basis. So this is a very, very cautious case, and likely you will be on the wrong side of that technicals, and the stock probably will take a false breakout and get a reversal from there. So, technical somehow, because of its limitation or because of its focus only on price and volume, somewhere gets a person into the wrong side, because it is just relying on these two. But the moment you look at the delivery in OI in conjunction to the price and volume, you get a better confirmation and your probability of wrong trades reduces. Again, the price goes up, delivery is flat, but the OI is falling. So price going up, OI is falling is a case of short covering, right? But because in delivery, not much participation has happened, these are the weaker guys in the market, weaker guys, the typical retail guys who can't sustain the increase in the price, even though they have a short position in the market. So they are moving out of the system. Possibly this is a sign of a moderately bearish, because once the weaker guys move out of the system, market will resume its fall in the prices. Again, price rising, delivery is falling, and open interest is rising. That means people are not at all interested in taking delivery of that stock, although open interest has gone up. So there are weaker guys who have come into the system. So this is the case of cautiously bullish. Price rising, delivery falling, open interest is flat. That means no long position has built into the system. It is a classic case of bearish, even though the price has shown a bullish pattern. Price rising, open interest falling, delivery also falling. That means these are the weaker guys who are covering their shorts, very similar to this. Most likely, immediately after weaker guys release their short position, the market will resume their downtrend because the weaker guys have reduced their short position in the market. I know this looks slightly complicated, and this is something which you will not see in many textbooks. This is share out of the experience that we have been able to design this matrix. But the more you practice and try to figure out which case is most suited for that particular day, the better you will be in making a judgment for probable price movement in that stock in the coming few days. This was the case of rising prices, and this is exactly opposite, where we are trying to show the case of falling prices. Quickly, falling prices, you have price decreasing and open interest rising. That means there are new shorts in the system. Price decreasing and open interest flat, but increase in delivery. This is probably the last leg of short. You have to be very cautious in making an aggressive bearish bet on the stock. Price falling, delivery rising, but the OI is flat. That means not many people want to build a short position, and they are actually covering their long position because price has gone down and open interest has gone down. So they're covering their long position. It is bearish till open interest falling, and from here it will become only aggressive bearish when there is new short position created in that particular stock. Rest, I think you can probably look at it in the later intervals and try to see if you can make some sense out of the judgments which I have shown to you in this matrix. Now there is an important observation which you should always keep in mind, that if the price is rising and open interest is rising at a faster rate than the seasonal average, means that the buildup is significant. So, each stock, as I said earlier, each stock has a set of participants or operator or managers who look after the stock. So each stock you have a classic pattern of change in open interest. For some stock, 5-6% change in open interest can be casual. For some stocks, 5-6% open interest change can be a big thing. So you have to look at the average change in open interest, and based on that average change in open interest, you have to try to figure out a significant change in open interest for that particular stock. So for Reliance, 5% change in open interest is a big thing, but for stock like JP Associate, 5% change in open interest is actually not very significant number to be kept as an outlier. And you obviously should make a judgment whenever there is any significant change in open interest. If you try to make a judgment on a daily basis, then you will make too much of judgments. Only react to prices on the dates when there is significant change in open interest, and this we will see when we take a case study of one of the stocks in an Excel sheet. Second is breakout from a trading range will be much stronger if an open interest rises during the consolidation. Greater the rise in open interest during the consolidation, the greater will be the subsequent move. A similar theory which works with volume and technicals, I would suggest similar works fantastically when you look at the open interest as well. While looking at the open interest, it is important that an individual investor look at the total open interest. Please do not look at only current month open interest, because when the open interest is getting rolled over to the next month, typically you will see fall in open interest. So whenever we look at the open interest, we combine all the expiries to look at the open interest. That reduces the rollover effect of open interest on a specific month. The total open interest gives a better idea about the equity of the futures contract, which is crucial for getting in and out of the market at the best possible price. What is rollover? Rollover is nothing but whatever contracts you have in the current month, when you want to roll over your contract to the next month, you have to pay certain rollover costs. Depends upon if you are a buyer or a seller of a contract. Okay, if you are a buyer of a contract and next month is trading at a higher price, say for example the July contract is trading at around 800 and August contract is trading at around say 850. If you are a net buyer of this, right, and you have to roll over your position to the next month contract, you sell this and you buy this. So in impact, you pay 15 rupees as a rollover cost. Sorry, my handwriting is slightly poor with this digital pen, but I hope I am making sense to all of you. Okay, so a net buyer of a contract who believes that the price of that contract will go up in the next expiry will typically try to roll over the contract to the next month, and the person is willing to pay 15 rupees as a rollover cost to carry the position to the next month. Let me try to draw a very important inference out of this data, that if there is significant long position in the stock, and if the long position is getting rolled over to the next expiry, that means the most likely that stock will see a bullish pattern continuing, because the previous expiry long position has been rolled over to the next expiry long position. You will see this when we discuss through the Excel. You will see how rollover actually is impacting the probability of that stock continuing with a bullish or bearish trend in the next expiry. You must have gone through options and you must have heard this term Max Pain. What is a Max Pain or a range theory when it comes to options? Max Pain theory signifies the maximum pain a buyer of an option will have to go through if the contract expires worthless. So we'll have to go through. Yeah, to go through if the contract expires worthless. On the contrary, in markets, someone pains is someone's gain. So pain and gain is dependent on the settlement method. So in case of an American option, the buyer of an option wants to take that pain because he can exercise it at any point of time. In case of European option, the seller of the option wants to take a risk because the contract will expire only on the date of final settlement. इसका मतलब है कि in case of a European contract, which is the case in India, the seller of an option is always the resourceful person than the buyer of the option, because seller of the option don't have to worry that the option contract will be expired anytime within the contract tenure. So typically, Max Pain theory suggests that wherever there is high open interest build up in the option chain, possibly there are more sellers in that option strike price, and they will try to defend the market at that strike price. For example, let's go to the NSE website to give you a practical example of what market is expecting with Nifty right now. So let's go to option chain. So let's go to equity derivative option chain. Okay, and this is a 26th July contract. If you see, the maximum open interest in case of call is at this level, this, okay, 3701, 3788. So clearly market is expecting that it will not cross 11,000 to 11,100 levels for this expiry, and the maximum open interest in case of put is at 4756, 4614, 4771, clearly suggesting that the option sellers believe that market will actually close near 11,000 level in this expiry. Change in open interest for the day in case of options is actually an indication of what the seller of the options are thinking about market can do. In this example, the seller of 11,000 call, they have squared up their position on Friday, and sellers of 11,000 put have built up their position on Friday. This means more sellers of put has come on Friday. That means market clearly believes that these sellers of put option clearly believes that market will not fall. It will not close around 11,000, and it will clearly close above 11,000 levels for this particular expiry. So Max Pain theory is essentially suggestive that the sellers are the resourceful lot because it is European. The sellers who are selling the open interest will try to defend that strike price when it comes to the final settlement of that contract. All right, we'll discuss this in detail when we go through that Excel sheet of a particular stock. Put call ratio, इसके बारे में भी आप लोगों ने सुना होगा, put call ratio. But to keep it in a very simple word, put call ratio is the ratio between open interest in put divided by open interest in call. If you go by the Max Pain theory that there are more sellers in the market because of Europeans, if the put call ratio is high, that means there are more sellers of put. That means they're expecting market to go up. And if the put call ratio is low, that means there are more sellers of call and they are not expecting market to go up because there are more sellers of call. So put call ratio is kind of an indication of the gravity of desperation which is there as part of the option seller as well as the option buyer. Higher put call ratio means higher selling in put, that means they're expecting market to go up. Lower put call ratio means aggressive selling in call option, that means they're expecting market to go down. All right. So yeah, these are the concepts which are important for you to understand. Now I want to take you through an Excel sheet which you should make every day for your limited stocks which you want to trade. So there are two styles of market participation. One is that you want to restrict yourself to 5, 6, 7 or 10 stocks. The other style is that you don't want to restrict yourself to specific stocks. You actually want to keep it open and you want to find out new stock opportunities from various scanning tools, so that wherever there is an opportunity, you participate and you get out of that stock. Okay. In the first part, I'm going to discuss about you specifically focus on your stocks only. So this Excel is meant for someone who is saying that, sir, I want to limit myself to only 5 stocks. My life should be around those 5 stocks and I will only trade in those 5 stocks whenever I feel there's an opportunity to trade. This is well suited for people who are into other occupations as well and who would like to spend around an hour or so doing the homework at the end of the day and trade only when there is an opportunity available. And those trading opportunity should give you extremely high return on your capital, because your number of trades will be much limited, because you are restricting yourself to only few stocks and only when there is an opportunity to trade in those stocks. Okay. So let me just have a quick look at the kind of questions I have received till this time. Okay. Actually, let me go through this Excel first, because I know a lot of you will have queries which probably that Excel sheet would be able to answer. So let me go through that Excel sheet, and after that I'll take one question at a time. And don't worry, even if I am unable to take the question in the current limitation of time, we will definitely reply back to you once you give us the queries over email. Okay. So let me take you through an Excel. So I want you guys to create a fresh Excel for yourself. Okay. And this is the process of creating that Excel. Okay. Now let me open up a absolutely new Excel. So this is a raw Excel. Let me name that Excel as okay. So say Tata Motor. I have taken Tata Motor as a case study. So let me take Tata Motor only. So, in this Excel, I want you to bring the data which is relevant for Tata Motor from the exchange website. I'm presuming that you don't have any access to any other tool. You don't want to pay money for any other tool. Even though you want to do that, I still want you to do this homework, because if you do it on your own for half an hour at least daily, you'll get much better perspective about a stock than just following another ready-made tool in the market, at least for this purpose. So what I do is, I go to exchange website, I go to the historical data, okay, I go to all reports. Okay, in all reports, remember I told you that we have to look at security wise price volume data. Now say for example for Tata Motor, I want to take the data from say I want to do the research. I mean, you should have at least 4-5 month data if you want to see the kind of positions which are there in that stock. So let's take a data from 1st of April. So 1st of April was holiday. So we'll take the data from 2nd of April. So I want security wise price, volume and delivery data of Tata Motors, EQ, and I want the data from 2nd of April to say till yesterday. I want the data. Okay. Okay, so I have to again ask for it. So 2nd of April to 20th of July. So this is the data which I am getting. Let me download the file in the CSV format. So I will download the file and I open this file. So this file gives me the archive of Tata Motor data from 2nd of April. Let me select. So what I am doing, I am selecting using my keyboard. I am selecting this. I am pressing Ctrl C, which is I am copying this data. I am going to my sheet which I have created, Tata Motor, and Ctrl V. I am doing a paste of this data of cash market of Tata Motor, and I am doing Ctrl S to save this data. Friends, this is a one-time exercise which you will have to do. Initial effort would be there, but on a daily basis, you will not be required to do this historical archive on a daily basis. All you would probably need is for past in the exchange website, there's something called past. So you just do past 1 day, get data, and you will get that 1 day data from the exchange. Yes, you need to update that 1 day data at least here, but then this will not take much of a time. It's just that for the first time, when you create that Excel sheet, you have to allocate significant time for your working. Okay, so this is the cash market data of Tata Motor which we have retrieved. I also want the derivative data. Now in derivative data of Tata Motor, I will get different expiries, I will get futures, I will get options. Okay, how do I get the data? First, let me try to bring in the futures data from the derivative database. So how do I get the futures of Tata Motor? So I go to again the all report section. In all report, I go to derivatives, and in derivatives, I go to contract wise price volume data archive. I click here, okay, and I select instrument called stock future, symbol Tata Motor, year I want it for 2018. In derivative, you have different expiries, right? Every month will have current month, next month, and far month. Typically, far month is not so active. So we can restrict our data analysis to only current month and the next month. Okay. Now, how do I pull my current month data? So what is the current month? We are talking about data from 2nd of April. So for April, 2nd of April, which one is the current month? The April expiry. Which one is the next month? The May expiry. Which one is the far month? The June expiry. हम लोग June expiry को अभी consider नहीं करेंगे. We are only focusing ourselves to April expiry and May expiry. So let us retrieve the data for April expiry contract, and the date will be, and I am doing only futures right now, I am not doing options. Because options, you will have individual strike price data to be retrieved. It's very complicated. I've made a very simple format for that, which is very, very effective. So I select a time frame from, again, I have to select the time frame from, I want the data from, okay, from 2nd of April 2018 to the date will be 26th of April, because this contract will expire on 26th, and we're talking about the near month contract. So 26th of April 2018, get data. So this is the data which I got for Tata Motor April expiry contract from 2nd of April to 26th of April. Let me pull this data in a CSV format. Let me save. Let me open. So this is my data of current month expiry. I will also use this header to copy, because in my sheet I don't have header yet. I want to copy this data parallel to the cash market data. So let me copy, paste, Control V. I paste this data. So now what data I have? I have Tata Motor 2nd April cash market data. I have Tata Motor 2nd April near expiry data, which is the April expiry data. Now what do I want? I want the next month expiry, which is the May expiry data. So let me close this file and I go back to NSE side and I want data for May expiry. So May expiry data you want from which date? Obviously, since we have started from 2nd of April, I'm asking the data from 2nd April, but my requirement will go extended till May because the May expiry is available till 31st of May. So let me get the data. So we get the data, we download the data, let me save the data, let me click the Excel, open. Now I have the data of Tata Motor May expiry contract from 2nd of April. Let me copy this data. So I'm selecting all the data. Okay, Control C, and I'm going to my main master sheet and I'm doing Control V. That means I've pasted my data in the third section of this Excel. So friends, our Excel first section was cash market, second section was near month contract, and the third section is a far month contract. Okay. Now if you see, 26th of April was the expiry of this contract, April contract. Let me mark this as a separate marker. So let me just create a box around this so that we all know that this was a day when the contract expired. Okay. Now after this contract expired, 27th of April, which is the near month contract now. The near month contract is not April contract anymore because the April expired. The near month contract is now the May contract. So what I do is the data which I already have for May contract as a second month contract, but now it has become a near month contract. I cut this data, Control X, and I paste this data in the near month section. So what I am doing is I'm creating that flow of cash market data, near month contracts, and the far month contracts. This flow will help us to know the kind of OI change which is happening as a cumulative change in combining both near month and the far month. Now I want the far month contract as on 27th of April. So the far month will be June contract. So let us go to the exchange site. So let me close this Excel now. Let's go to the exchange site and ask for the June contract. And since which day? June we want from 27th of April. So 27th of April, and we want it till 28th of June, which is the expiry date of the June contract. So which is 28th of June. Friends, I'm sure some of you would be feeling that this is such a trivial exercise. Why are we doing this? There are ready-made softwares available. We can use them. Friends, trust me. I've been into market for so many years. I know that this exercise is so hands-on. It gives you complete control over stock, because if you write, if you see with your own hand, you would be able to make a better sense of what is happening in that stock. You know, I know few chartists who are drawing chart in a traditional way in that paper, in that, you know, the graph paper which we used to use during our school days. There are good chartists who actually draw with their hand in that chart. Why? Because that gives a strong registration of the price in their mind. Softwares are good, but softwares are at times does not give you so much of concentration or registration of your data in your mind. Okay, let's go back to the data accumulation. So we have a June expiry. Okay, so now I am not selecting the header because my header work is already done in the sheet. Now I will only select the data. So I select Control C, Control V. So now I have the far month here. Again, May is expiring here. So let me mark the May expiry as a block. And after May, from 1st of June, this data will become part of the near month section. Okay. Now let me go back to the Exchange site and ask for further data. So actually what I have done is I have already created an Excel sheet because I knew there will be paucity of time. So let me finish only this part and go back and open that Excel sheet for you, which will help you to do your analysis. So I need July expiry now from 1st of June. So let me select 1st of June and the data expiry will be July is 26th of July. तो 26th of July तक इसको रखते हैं. 26th डेटा मांगते हैं, उसको CSV को डाउनलोड करते हैं, सेव करते हैं, ओके, ओपन करते हैं, और ये जो डेटा है विदाउट हेडर इन दिस केस इसको कॉपी करते हैं और हमारी मेन शीट में इसको पेस्ट करते हैं. फिर यहाँ पर ये जो सिलेक्ट हुआ है इसको क्रॉस करते हैं, कंट्रोल X, और इस डेटा को हम यहाँ लेके आते हैं. उसके बाद में what we need to do is find out the next expiry, which is the August expiry. We want data from 29th of June. So we just select this as an expiry, mark this as an expiry. So from 29th of June, we seek data of August contract. So 29th of June, and we seek till 26th of July. So this is the August contract which you are getting. Okay, let me copy this data, control C, and paste the data here. So friends, this is the homework which we will have to do one time, which will take some time. But the moment this is done, all you need to do is copy only 1 day data every day. This should not take more than 10 minutes if you are an active user of this tool. Okay, so now my raw data part work is done. What do I do with this raw data? Now I will have to get into my analysis part of the work. Okay, so there are a couple of analysis which we will have to bring in on the right side. So let me first freeze. Okay, so how do I freeze? So let me just freeze the top row. Okay, and what do we need? So we need, let me bring the date first because date is lying far away. So this is the date. Okay, let me bring the price. Okay, so okay, I'm trying to get the closing price of cash market. Okay, let me bring the delivery. I am interested in knowing how much is delivery happening in this stock on a daily basis. So let me go to delivery in the cash segment. So how do I do that? Let me see what is the delivery percentage in terms of total traded quantity. So a value is given here. So this is turnover, which is in value terms, multiplied by this percentage. So we do this as a percentage. तो इससे हमको पता लग गया कि out of the delivery, out of the trade which has happened, so much has resulted in delivery. Let me convert this into crores for our better understanding and analysis. So we convert this into crore. So 1 0 0 0 0 1 2 3. So this is in crores. So this stock witnessed almost 126 crore of delivery that day. I can copy this, go down, and I can see which day how much delivery has happened. Now in my PPT, I mentioned to you that if you want to compare the change in delivery of that stock of that particular day, you cannot compare with one single day, which is the previous day, because that day may be a holiday, that day you may have rain. So maybe that day delivery may not have happened because of other factors. So typically you have to calculate the average. Last 5-day average is a good enough benchmark. So last 5-day average delivery. So that's a good enough benchmark. So let me calculate the average. average is equal to average. So this is my average for last 5 days. So whenever I want to compare today's delivery with any other parameter, it has to be the average delivery, which is an important parameter. Now I want to see the open interest. I've seen the delivery from cash segment. Now I want to pull the open interest. Remember what I told you? We have to see the cumulative open interest. So cumulative open interest is open interest of next month divided by plus the open interest of the current month. So this is the cumulative open interest of the stock Tata Motor. So let me copy this cumulative open interest, and I want to see the change in open interest. So as I said, the change in open interest should be change in the cumulative open interest. You cannot see change in open interest at a standalone level. So change in cumulative open interest, this minus this. So this is your absolute change in cumulative open interest. So this is the actual increase in open interest of this stock. All right. Okay. Again, I'm saying you, for some people, this may look like a trivial exercise, boring exercise. But my dear friends, in derivatives, if you have to make money, there are people who are really, really good in what they're doing. And you as a retail participant, if you at all have to take money from them, you will have to put an extra effort. Otherwise, derivative is certainly not an instrument for you, unless you are a full-time trader with any active prop desk in India. Okay, now we have to calculate the change in price according to our metrics, change in delivery, and change in OI. Okay, now change in price is nothing but price of today minus price of yesterday divided by price of yesterday. Okay, delivery, as I said, you can't compare with previous tenure. So ideally delivery should be expressed as percentage of last 5-day average. In this case, 5-day average is not there because our old data is not there. So let me consider this average only to be the last 5-day average for our benefit purpose. So this is our delivery as a percentage of 5-day average, and change in OI is difference in OI divided by previous day OI. So these are actual. Now let me convert that into percentage. So I right click, I format the cell, I'll make it percentage to 2 decimal. So this is my percentage change. Okay, now I can see percentage change in price, delivery as a percentage of average delivery, and percentage change in open interest. All right. All right. Okay. Now what do I need? Now I'm trying to make an attempt that whether the position added in the market is a long position, long covering, short position, or short covering. And also, I will try to pull in the open, high, low, close, and average price for the day. Okay, the open, high, low, close of the stock in cash segment. So the open in cash segment is this, high in cash segment is this, low is, again I'm going and giving reference to that cell, this, close is the close price, not the last price. Last price is the last traded price. We have to look at the close price, and the average price is, this is the average price. Okay, now I just copy this. This data will give me an important support and resistance, an important price point where the bigger guys have entered into that stock and they will defend that price point in the market. Okay. Okay. Now let us pull all this data, select all the data, and let us pull it till today, till yesterday. So all I need to do is just select and copy paste the formula. So here I am. So I have my complete data now available with me. Now I will have to start analyzing whether there is a long guys who are entering into the system or the short guys who are entering into the system. Okay. So from next day, what you are going to do is, from the next day, you just have to update your cash market data, derivative first month data, and second month data. And all you need to do is just copy this formula part, copy and just Control C and Control V. So your your formula will automatically update the different data which you need to analyze and make a judgment. Now let us try to make a judgment on this stock, Tata Motor. Okay. Now on 3rd of April, price went up. Actually, you know what you can do is you can create formatting based on price. So what we can do is we can select this cell. We can write conditional formatting. So highlight cells greater than say 1%. Okay, and also conditional formatting, highlight cell less than -1%. Okay, so these are outliers days when price has moved significantly. Similarly, for delivery, format cell, highlight cell greater than 100%. So these are the dates when delivery has happened more than 100%. And in OI, if you see Tata Motor, typically change in OI is around 1.5%, 2%. It's an average. So I will select this cell, this column, conditional formatting, highlight cell greater than 2%, and also one more time, conditional formatting, highlight cell less than -2%. So these are the days which are outlier days. That means someone resourceful has come into the stock or someone resourceful have exited the stock. Okay. Now let's try to do our homework. On 3rd of April, there has been increase. Open interest has been increased by 3.5%. And sorry, I'll just bring the open interest before the delivery. So I will cross this and I will paste it here. Okay. So price has gone up, open interest has gone up, delivery I'm not giving importance for last 3-4 days because we actually have taken last 3-4 days, first 3-4 days as an average of future. So open interest has gone up, price has gone up, that means new long have entered in the system. So I will add here, I will just give the reference of long. So this is a day when these many stocks, shares, these are not number of contracts, these are actual number of shares which have come into the futures contract. So this is a long position. This days low price becomes a very, very important price because this is a price which will be typically defended by the person who has gone long into this stock. So for me, if I want to maintain the ladder of the prices for this instrument, for this stock, I would say 337 is a very important price because this is the price where longs were getting added into this stock. Next day, again the price has gone up, open interest has gone up slightly, so new longs were added, but not as much as the previous day, but yes, new longs were added and good delivery happened that day. On the next day, price went up, but open interest additions were not so significant. Delivery, however, was pretty high. So what we said in the next PPT, remember, when open interest has not been added, that means people don't want to take position in derivatives. Although people have taken delivery, price has gone up, you need to be cautious with this action of the market. So from here, I will probably create a cautious view that maybe until there is increase in the open interest, I will not go aggressive buying in the stock. I need to be cautious bullish on this stock. Next day, price is flat. Again, open interest buildup is not so significant, only 0.68%. That means the buyer, the bull, they are kind of not very, very sure whether they want to extend beyond these highs. So this actually 73 becomes a very, very important high level, because at this high level, you see open interest buildup was not there. So maybe this is a intermediate high which you can expect, because bulls don't have that strength to take the price to the next level and build more position in that particular stock. The next day price fell and the open interest is increased. That means there was a short position build up in this stock. Again, the high of that day becomes important. So when there is long position build up, low becomes important. When there is a short position build up, the high becomes important in a particular stock. Okay. The next day open interest went down and the price went down. That means the guys who were long, they have squared up their position. Now this is a great signal that someone who went long because he thought that the prices will go up, did not go build aggressive position and stopped on at around these 370 odd level, and have squared up the position when the price went a high of 362. So this is a time where you want to believe that the stock will not show a major upward rally, and this is the stock which should always be sell on rise, because the buyers don't have strength to continue with the long position, and there are sellers who have initiated the short position. Okay, now see this day open interest again getting built up more than 1%, and there is a short position again. So there is a short position, and on this day price went down by 5%. Okay, see the level, every time the price is making a high, it is coming to 64, 65, and again getting down, getting beaten. So this 365 odd zone becomes a very important resistance zone for the stock, and the price fell by almost 5% with a significant increase in open interest. That means this stock is in control, total control of bears in the market. All right. You know why I'm saying this to you, why it is important for you to clearly know that whether there is a bull in the stock or team of bear in the stock. Because if there are team of bull in the stock, you can only make money if you are buying first and then squaring up your position. If a stock is in control of bull, and if you are selling the stock first, then God save you, because bull will not allow you to make money. If you are buying a stock and the stock is in control of bull, even bull will like it, and they will kind of reward you with better opportunity. This is a great way to filter out your trades, because you will not trade in both sides. You will only trade when there is a bull, and you will trade long when there is a bull control, and you will trade short when there is a bear control in that stock. Is this concept clear, everyone? So let me open that Excel sheet which I have already created. So let me close this one, and let me open that Excel sheet which I have already created. Okay, so this is my analysis which I did for Tata Motor. I'm going to share this Excel sheet with all of you so that you understand the format, the way I have done it. So this is how I have done it, long, short. At the end of the expiry, I'm trying to see in this expiry how many longs are there and how many shorts are there. Friends, this is just a tentative working, right? I mean, you can't for sure say that these many longs are there, these many shorts are there, because in India, the open interest with respect to long guys and short guys is not clearly disclosed. Whereas in US, all the underlines, you can know how many longs guys are there, how many short guys are there, because they have to disclose. But in India, only with the help of price behavior, you can kind of predict whether तेजी वाले ज़्यादा थे या मंदी वाले ज़्यादा है उस स्टॉक के अंदर में. Alright? So if you see, I've done this homework and I've seen that in the month of April, shorts were very, very aggressive in Tata Motor. And if you see the cumulative open interest change, starting of May contract, the open interest is around 70, around 7 crores 50 lakh shares. And in the starting of April, the open interest was around 6 crore 60 lakhs shares. So that means almost 1 crore shares have been added on the short side of the market. So if you at all have to pay Tata Motor, you will always have to play on the short side. No matter how Tata Motor seems to be cheap, no matter how much car you see on road, no matter how much you are inclined to buy this stock because Maruti is going up, why Tata Motor is not going up, it should not be a matter for concern for you. What you are doing is you are just blindly following what the rockstar guys are doing and playing as per the positions of the resourceful people in the market. So I did this in April and then I did the same thing for May. May I have seen again aggressive short positions were added. So in May, further short positions were added. So the number of positions open in Tata Motor in futures contract was almost 9 crore shares, and which we saw in the initial part of April contract, it was 6.5 crore share. So what a strong, powerful control of bear in the stock, and which is also clearly getting reflected from the price movement from 367, 360s, 370 levels to the level which we are, which we saw in the month of May, 290, and the whole June expiry, it was hovering around the same level, although still there was an additional increase in open interest on the short side. Now, what is happening in July? Let us see, because I am sure a lot of you are asking me this question. I am unable to see the questions right now because we have paucity of time. But I am sure a lot of you would be asking me this question that, sir, future बताइए, past तो देखने से बहुत easily बोल देते हैं. तो चलिए future की बात करते हैं. तो अगर आपने जुलाई में देखें, so जुलाई में the build-up of open interest alongside the price change, the short positions has been covered. Almost 31 lakh shares of short positions have been covered. This cumulative open interest of 8 crore 52 lakhs, the one which was 9 crore 21, has now been reduced to 852. Although there are still short positions in this stock, this stock is still a sell on every rise, but kind of this stock, if you see the lows, kind of this stock is trying to make a new base around 245 to 250 level. It may not be a very bad idea to try and make an attempt to go long in this stock. Disclaimer, please do not trade on the basis of what I am saying. I am just giving you an indication. I am not responsible if you lose money in this, but looks like that it is creating a new base for itself around 245 to 250 level, and it can be a good idea to buy at least a higher call in this stock with a limited loss, or to take an attempt when the price comes back to around 250 to 52 level with a stop loss of around 5-6 rupees. You can expect a bounce back to 260 to 65 in this particular instrument. Am I making sense? Am I making sense? Okay. I hope till this time something. Yeah, of course, Praveen, this can be done in commodities also. But commodities, there is a lot of synthetic contract, synthetic open interest gets added. It works fantastic in NCDX. It works like wonderful in NCDX. But For MCX, a lot of people do different kind of trades, and because in commodities you have hedgers, the open interest of hedger is at time very deceptive. It doesn't give a unidirectional view of the market. But in case of equity, most likely there are speculators who are building the OI. There is a clear direction when you consider the OI of speculators rather than the hedgers. Yeah, Raja, I'm coming to that, Raja. Krishna, don't try this on Excel, on Index. Index has lot of synthetic trades. I don't think so. This will work very good with Index. This is a stock specific. Yes, Paramjit, you will be getting the sheet. This is my, my effort of last 15 years, very proprietary, but I still want to share with all of you because I know that some of you will definitely take care of this. So next time when you log into elanmarkets.com, this webinar video will be hosted, recorded video will be hosted in that section, and you will also get access to that PPT and the Excel sheet which we have created right now. Ashish, you didn't know, Ashish, Excel, you use Excel, you learn Excel. You don't need any course on Excel for stock market. Please, friend, you start using it because there are some things in life you can only do if you do it. Yeah, Sumit, I'm coming to the options. This is just the futures. We have so much to discuss. So please hang on. I don't, because we have limitation of time. So just give me half an hour more. I need 2 minutes break to get a quick refreshment of water for my throat. And just give me 2 minutes and then we will join back again. No, Shankar, we can't go for 10 minutes break. I can only take 2-3 minutes. Huh? Hi, I'm back. Okay, you want this Excel sheet today? Let me see how we can do that. Okay, now let me. So you understand how futures are done. So अब थोड़ी options की बात करते हैं, because there are some of our friends who want to get this thing done for the options as well. So अब ऑप्शंस का डेटा कैप्चर करना थोड़ा कॉम्प्लिकेटेड है. इट कांट बी कैप्चर्ड लाइक दिस. और ऑप्शंस के सॉफ्टवेयर्स भी जो मिलते हैं मार्केट में वो आपको सब्सक्रिप्शन वाले सॉफ्टवेयर ज्यादा मिलेंगे. लाइक आई लाइक माय एफएनओ अ लॉट. दिस गाय इज रियली वर्कड हार्ड इन गिविंग यू गुड आउटपुट. बाकी किसी का मेरे को उतना डेटा पे somehow ट्रस्ट नहीं है, बट आई नो माय एफएनओ इज गुड, बट somehow that is expensive. And I would not recommend you to subscribe to that tool only for open interest analysis. तो हमने एक्सेल में उसको डालने की कोशिश की है. This is how we have done. So for options, you have to download the hard copy on daily basis. Okay. जैसे for example ये 2nd of April का मैंने डेरिवेटिव का भाव कॉपी डाउनलोड किया. ओके, एक्सचेंज की वेबसाइट से कहाँ से डाउनलोड होता है, I've already told you. Now what we need is टाटा मोटर के ऑप्शंस का पूरा मेरे को डिटेल चाहिए. तो वो मैं एक्सेल में कैसे लेके आऊंगा? I can see a few questions where one or two of our friends are saying that that this is too numerical. Friend, I can only say this, that trading is numerical. Trading, if you only rely on your gut and don't do numerical, your probability of success is going down. And I'm believing that all of us want to be a sustainable trader in market, right? We are not here for time pass. So if it's numerical, we all have to do it. There is no option at all. Thoda kaam karna hoga, because people like me, traders in my organization, they are doing these homeworks, and the more algo is coming into picture. 65% of exchange volume is algo these days, and algo is numerical. तो आपको ये करना पड़ेगा, नहीं तो ट्रेडिंग आपके लिए नहीं है. फिर आप प्लीज ट्रेडिंग का माइंड से निकाल लो. अगर आप मैथमेटिक्स या थोड़ा न्यूमेरिकल के साथ, इट्स नॉट अ हार्डकोर मैथमेटिक्स, अगर आप न्यूमेरिकल नहीं कर सकते तो ट्रेडिंग आपके लिए प्लीज नहीं है. ओके ओके, ऑप्शंस. तो कमिंग बैक, तो मुझे ये भाग कॉपी से टाटा मोटर का खाली डिटेल चाहिए. तो मैं पहला काम क्या किया, मैंने फिल्टर किया इसको. ओके, फिल्टर किया और मैं सिंबल में क्लिक किया और यहां मैं टाटा मोटर सर्च किया. तो मैंने टाटा मोटर जब सर्च किया तो मेरे पास सिर्फ टाटा मोटर का डेटा यहां पर आ गया. ओके, now in instrument I am getting future stock as well as option stock. Let me select the instrument and only select the option stock. तो मैं इसको सिलेक्ट कर लिया. अब मेरे पास जो ऑप्शंस का डेटा आया वो सिर्फ टाटा मोटर का आया. ठीक है, तो मैंने क्या किया, ये पूरा डेटा मैंने सिलेक्ट किया. I know it is an exercise, but friends, you will have to do it. I am repeating this again and again, but आपको ये करना होगा अगर आपको ऑप्शंस में कंट्रोल पूरा लेके आना है. मैंने इस डेटा को सिलेक्ट किया, कंट्रोल सी किया और उसी शीट के अंदर में मैंने इस डेटा को पेस्ट कर दिया. तो आप देखो, मैंने एवरी डे, जैसे 2 अप्रैल का मैंने डेटा को पेस्ट किया. फिर उसके बाद नेक्स्ट डे का डेटा 3 अप्रैल का आया तो मैंने उस डेटा को पेस्ट कर दिया. फिर उसके बाद 4 अप्रैल का आया तो मैंने उस डेटा को पेस्ट कर दिया. इसका मतलब मैं क्या कर रहा हूं, मैं ऑप्शंस का टाटा मोटर का जितना डेटा मुझे डेली बेसिस पे मिला है, एवरी डे रॉ कॉपी से डाउनलोड करके मैं इसको अपेंड करता जा रहा हूं और नीचे उसको ऐड करता जा रहा हूं. ये कोई बहुत एफर्ट वाला काम नहीं है, क्योंकि ये हम सिर्फ डेटा को नीचे में ऐड करते जा रहे हैं. ओके, ये ऐड करने से क्या हुआ, व्हाट वी गॉट आउट ऑफ दिस इज our exhaustive data of Tata Motor options chain for last 3 months. What are we trying to do with this data? What I am trying to do is trying to see whether intensity of open interest in call and put at a cumulative level is giving me some indication of what option writers are thinking about Tata Motor. ठीक है, जो अपन लोगों ने पुट कॉल रेशियो की बात की थी, मैं उसी की बात कर रहा हूं कि मैं इससे वो देखने की कोशिश कर रहा हूं कि पुट वाले ने ओपन इंटरेस्ट कैसे बढ़ाया है क्यूमुलेटिव लेवल पे, कॉल वालों ने ओपन इंटरेस्ट कैसे बढ़ाया है क्यूमुलेटिव लेवल पे, और अगर फ्यूचर वालों को लग रहा है कि शॉर्ट साइड में पोजीशन बिल्डअप हुआ है, if future people are thinking that there is a short position happening in Tata Motor in futures, whether call option seller are also supporting that view or not. So basically option analytics is helping me to support my view of futures contract. इसको मैं कैसे करूंगा? So there's too much of data. Excel has this beautiful function called pivot. ये आप सबको सीखना चाहिए, and because this video will be available with you, please learn this feature called pivot. मैंने क्या किया? I selected the complete sheet. So the moment I press here on the top, I can select the complete sheet and I insert pivot table. I click and I get this range. I say okay and I get a pivot table. Now this is a pivot table. Okay, this is a format of pivot table. Maybe some of you would be knowing about it, but I'm assuming that किसी को इसके बारे में कुछ नहीं पता है. तो एक बार मैं pivot का बेसिक आपको समझाता हूँ कि कई ऐसे एनालिसिस हैं जो आप पिवट के थ्रू ही कर सकते हैं. you don't have to, you can't do it through filters because filters are very raw filtering. Pivot are add-on analytics which Excel itself can help you to do. You don't have to become an expert programmer or expert analyst to play with the Excel. A pivot can help you to play with the data which you have already captured. Okay. Now इस pivot के अंदर में 5 मल्टी डायमेंशन स्ट्रक्चर है, 5 सेक्शंस होते हैं, फिल्टर्स, कॉलम्स, रोज एंड सिग्मा वैल्यू. ओके, मैं आपको एक एग्जांपल देता हूं, मैं आपको पोस्ट करके दिखाता हूं, देन यू विल बी अंडरस्टैंडिंग कि मैं क्या करने की कोशिश कर रहा हूं. सो ए आई वांट टू सी कि बेसिकली दिस इज व्हाट आई एम इंटेंडिंग टू डू. So I want to see on a date wise. So date wise means I want to see the time stamp. So I want date wise change in open interest. So change in open interest of options type. ये मैं column में डाल देता हूँ. Okay, and I want to keep expiry as my filter. This is count. Actually, this will not be count. Once I select this value field setting, this should be sum. Okay. So what I have done is I want date wise change in open interest of call summation, change in open interest of put summation. I don't need grand total for this. You can keep it also, there is no problem. इसको मैं अगर expand करूंगा तो आप देख सकते हो कैसे date wise change in open interest of call और change in open interest of put मेरे सामने आ जाता है. Is this clear? Is this Excel very tough? Can you guys hear me? I just heard Amish saying that he can't hear me. Tubhin is also saying, oh, you can hear. Okay, okay, okay. No problem, don't worry. This is not at all tough, please. It's very easy. So guys who have not done it, who believe that they don't, yeah, it's very easy. Thanks, Viral. It's not very easy. It's not very tough. तो आप इसको मैं फिर से करके देख रहा हूँ, फिर से करके दिखा रहा हूँ. So I'm reverting back. I'm reverting back my charan. So what we did is, this is, I selected all the data, I inserted and pivot. तो pivot में मेरा ये format आ गया Excel के अंदर में. What I want is, as a filter, I want expiry dates to be the filter. I want timestamp, which is dates, to be on my first column, which is the row wise, and I want change in open interest to be the value. This value should not be count, it should be sum, because we want sum of open interest. And on the column, I want option type, call and the put. Okay? अब मैंने क्या किया, ये जो डेटा मेरे पास आ गया, obviously you look at this video again and again, and थोड़ा आप करोगे ना उसके बाद में, तो you will get a hang of what I have done. Don't worry. अब मैंने क्या किया, मैं ये डेटा यहाँ पर जो मेरा आया है, इसको मैं Ctrl+C कॉपी किया, और जो मेरा यहाँ पर है, मैंने 2 कॉलम इंसर्ट कर लिया यहाँ पे, और पेस्ट स्पेशल वैल्यू करके मैंने यहाँ पर उसको पेस्ट कर दिया. So essentially what I am getting in this Excel also now is change in OI of call, change in OI of put, cumulative, all expiries included. क्योंकि यहाँ पर देखो मैंने सारे expiries को include कर रखा है. If I want only say April, I will get खाली April. If I want May, I will get only May. But I'm interested in all. कि सारे expiries को मिला के मेरा क्या OI का चेंजेस हुआ है, ये मेरे को आप बताओ, और मैंने यहाँ पर कोई स्पेशल वैल्यू कर लिया. ओके, नाउ द डेट्स व्हेन आई सी अ सिग्निफिकेंट बिल्ड इन ओपन इंटरेस्ट लाइक दिस डे, व्हेन देयर इज इंक्रीज इन लॉन्ग साइड ओपन इंटरेस्ट, ठीक है, दैट डे वी शुड सी अ सिग्निफिकेंट बिल्डअप इन पुट ओपन इंटरेस्ट आल्सो. करेक्ट? देखो मैंने क्या बोला था कि पुट के सेलर क्यों बेचेंगे? क्योंकि उनको मार्केट तेजी लग रहा है, करेक्ट? The sellers of put will sell the put option because they believe market is going to go up and they want to enjoy that premium which a put option is giving to them. So when there is increase in open interest in futures, correspondingly increase in the price, there should be very likely increase in open interest of put option as well. इस केस के अंदर में देखिए कॉल और पुट के मुकाबले पुट में ज्यादा ओपन इंटरेस्ट इंक्रीज हुआ है, इसका मतलब इवन ऑप्शन सेलर्स बिलीव दैट तेजी होगी, लेकिन बहुत ज्यादा सिग्निफिकेंट हुआ है, बिल्डअप नहीं हुआ है. नेक्स्ट डे ओपन इंटरेस्ट बिल्डअप, प्राइस गोइंग अप, लॉन्ग साइड में पोजीशन बिल्डअप हुआ है, लेकिन बोथ पुट और कॉल दोनों में ओपन इंटरेस्ट बिल्डअप हुआ है. टिपिकली पुट का ओपन इंटरेस्ट शुड बी मच, change in open interest of put should be much more than change in open interest of call. In short, put call ratio should be at least 2, but इस केस के अंदर में खाली 1 है. That means this increase in long position has to be seen in a very very cautious note. उसके बाद वाला दिन देखो आप, जब नया शॉर्ट पोजीशन आया है छोटा सा, लेकिन कॉल के अंदर में काफी एग्रेसिव राइटिंग हुई है. उसके बाद वाले दिन में जब लॉन्ग पोजीशन आया, इवन दो देयर इज अ लॉन्ग पोजीशन इन दैट कॉन्ट्रैक्ट, द ओपन इंटरेस्ट ऑफ कॉल हैज गॉन अप. दैट मींस the options writer are taking the opportunity to sell call because they don't believe that the stock price will go up. That's why they are selling the call option. See, that day when there was first sign of new short position in Tata Motor, price went down, there was a new short position and there was an increase in open interest of call. The moment there is increase in open interest of call, इसका मतलब ऑप्शन के जो सेलर्स हैं उनको लग रहा है कि मार्केट तेज नहीं होने वाला है, तो कॉल ऑप्शन को आराम से हम लोग ऊपर बेच सकते हैं. Is this concept clear what I'm trying to do? Oh, Suresh, okay, I'll speak in English. Yeah, I'll speak in English. Sorry about it. The concept is very, very simple, that your future open interest increase in conjunction with the price increase gives you an indication of long or short position in the market. Through options data at a cumulative level, I am trying to predict whether option sellers also support the view given by the futures contract. And always in options, you should look at from a seller's perspective because it's a European option. Very seldom you will see a buyer of an option leading the price movement until and unless there is some insider trading. If there is an insider information, typically a person who has a better understanding of the movement in that stock, he will buy the option. But typically at a consolidated level, point is consolidated, not at a strike price level. Typically at a consolidated level, you will see seller of put option believing that the price will not go down, seller of a call option believing that the price will not go up. Mr. There's a point by Narkhade that none of my questions are getting answered. Definitely your question will get answered. Please allow me to complete what I am trying to say first. All the questions will get answered. If not answered, your question will be answered. You mail it to me till Wednesday. We will try our best to give you answer to your questions. Okay? Because I have lots to share with you guys and we have just short of time. So we definitely want to give you as much as possible and your questions will be answered. So this is the working sheet which has been created. This will be forwarded to you. Now let me go to the second section of the discussion, which is, this is basically, the first section was talking about you want to limit yourself to those 15-20 stocks. Okay, or 5-10 stocks. I would suggest it should not be more than 5 to 10 stocks. Second section is essentially you want to find out opportunities from whatever stocks is traded in the market. For that, you need to run screeners, which are options oriented. So, a lot of you are users of Stockage app. A lot of you have seen the various kind of scans opportunities which our app is giving to all of you. If I go to the app, I'll show you in the scans, we have price scans, different kind of price scans. We have volume and delivery scans. If you want to know anything about any specific scan, there's something called page info. You get detail about that. Go to any specific scan, you press I, you get detail about what exactly this scan is all about. Okay. Then you have technical scans where you have all these technical indicator scans, fundamental scan which may not be relevant for you. Then you have future scans, option scans, candlestick scans. So you have a lot of scans available, and you should use these scans to find out stocks which can have the propensity to any kind of price breakouts in the near future. From a derivative perspective, the kind of scans which you will be using will be a combination of future scan, volume and delivery scan, technical scan, and price scans. Couple of scans which we use in our organization I wanted to share with you. Based on that, you will get a pretty good understanding of how such scans can be used to trade in the market. Okay. Now this is the part where I want to share with you some strategies which can be useful for your trading purpose. Now this is one of the combination scans which we have, where we have combined high trade and deliver quantity, close crossing last week high, close crossing last month high, close within 52-week high zone. So stocks which are typically trading within 52-week high zone, which is for us 15% from its 52-week high, those stocks typically have this tendency of making newer high. CCI, a technical indicator, crossing above 100. William R percentage crossing minus 20 from below. And if you don't know any of these indicators, don't worry. You go to our Learn section. In Learn, we have technical. Some of the indicators are explained here. Or if you go to any specific stock page and go to technical, in technical you have indicators. You go to say any indicator, say CCI. You click I, you get the text as well as a short video on that indicator which will tell you what this indicator is all about. Okay, so CCI, then you have William percentage, the new long, and aggressive new long. Aggressive new long is a unique thing which we have created, where we have combined the long position along with the delivery. So aggressive new long is nothing but combination of long positions in the market and average delivery. If there is a stock where the delivery is high and there is a long position in the market, that's how we call it an aggressive new long position. So once we have these, we get certain stock outputs in the form of, in this window called stock window. You will get limited stocks, but whenever you get a stock here, there is a very high chance of some kind of a breakout in that particular stock. The strategy which you can adopt is you enter when price close day high is, when previous day high is crossed. You can keep a target of 5% and trail it to 3%. You can keep a stop loss of 3%. Your success rate, what we have seen in last couple of months of our working, is as high as 75%. Let me give you an example of few stocks which we traded. So Pidilite is a stock which came on 28th of May. So when we ran our scan on 27th of May. We get Pidilite for 28th of May. This is 27th. So on 28th of May, when the price crossed the high of 27, we entered at a price of 1147, right? Our target was 5% of this, which was around 1147 into 1.05, which was around 1204, right? However, as we reach 3% of this level, which was around 1181, we kept a trailing stop loss because our loss limit was 3%. So that's why we kept a trailing stop loss at 1181. Although our target was to get 1204, but because on an intraday basis 1181 trailing stop loss got hit, we still booked our profit at 3% in this particular trade. If we go to the next trade, Tata Elxsi, the stock came on 13th of June, which was actually 12th June scan, and the trade available was for 13th June. Same logic. So you have here this day high. So we entered when this day, which was 12th of June, high was crossed with a entry price was 1283.50. Our target was 5%, right? But our trail was 3% of this, which was 1322. Although this stock made high of 5%, what was our target? But still, because our trail was at 3%, we were able to square up our position. This is one of the trades which we initiated on Infosys. However, if you see Infosys on 16th of June, which is this date, 15th high was around here, because our model said that we will only trade when the high of the previous day is getting breached. Because the high of the previous day did not got breached, the trade did not get initiated. If you see, we are actually quite lucky that the trade did not get initiated. Otherwise, we would have to have cut the trade on a stop loss. Then you have Bata India. Bata India same 19th of June. This is 18th June. 19th June it crossed the high. We entered here with a target of 5%, but we traded at 3%. So we squared up our position when the stock reached 843. However, we are not saying that we were always correct. There were wrong trades also. Classic one was this Hexaware trade, which I think was quite unusual trade for a lot of people. This was trade on 27th of June. So 27th of June was this day. 26th was this. We entered when it made a high, but it did not sustain. It led to a stop loss of 3% for us. So far, this combination has given us a success rate of around 75%, which you see is not bad. Although we have realized 1:1 stop loss, but if we can get trades at 5%, I think we would eventually make money in this model. The idea is very simple. You create combination scans, you identify stocks satisfying these scans, and you get a stock which is almost near to the satisfaction of this scan, and you only trade in that stock with this kind of a model. We have used this model. You can probably devolve the model. You can make target of 4%, stop loss of 2%. You can make target of 4.5%, stop loss of 2%. It's totally dependent upon your risk appetite and your money management strategy. Okay. Combination scan 2. High delivery and quantity, close crossing last week high, close crossing last month high, close crossing 52-week high, closing above previous high, close within 52-week high zone, CCI crossed above 100, RSI crossed above 70. These are the various parameters I've added. You can add up to 10 parameters in our app. You get list of stocks where you have perfect match and nearby match. Okay, I'll show you the example through this app. So like in my combinations, like for example, like this is a combination, one of the combination which I use, high delivery, near moving the average, 100, 200, quarterly sales, quarterly growth, consistent cash from operation. I see there are no stocks if I remove the filter. So I see perfect match called Kanpur Plastic Pack. This is more of a swing delivery based trade which I do, not applicable for derivatives. But then you get either a perfect match or nearby match. Even if you get a nearby match, you can still think of initiating trade in that nearby stock. So the model is same. This got initiated on 7th of May. Entry price was 818. 842 was an exit. We wanted 5%, but we got a trail of 3%. The beauty of trail is that you at least make that much money which you were planning to lose. Okay, but there were trades where we made 5% as well. Like this trade did not get initiated. This trade of Take Solution did not get initiated. This trade of AstraZeneca did not get initiated. This trade of Merck did got initiated on 31st of May, and we made a return of 3% in that. This trade of Tata Consultancy did not get initiated because the high was not crossed on that day. The success rate of this strategy is 100%. Mind you, less stocks are getting generated, and out of that only few stocks are crossing the last day's high. So chances of accuracy is high. So I always have a belief that you trade less, the quantum can be, the volume of that trade can be high. I mean, you put more money as a bet on that particular trade, but trade less and trade efficient. That's my mantra of success for the last 15 years. Combination scan 3, close crossing 52-week low. I mean, just opposite side now. In the positive side, we have taken cash market for delivery, whereas on the short side, we have taken derivatives. Although derivative exposure is so high, I will never recommend you to go short. But still, for someone who wants to play on the short side of the market, these are certain parameters which you can use. The logic remains the same, 5% and 3%. The accuracy of this model has been almost 80%. Bank of Baroda initiated no trade. Bharti Infratel, yes, there was a trade entry because it crossed the low of that previous day, and then we were able to take 3% without any stop loss. And Adani Power, yes, there was a trade. Hindustan Construction, yes, there was a trade, and we actually got almost 5% in this stock. So we entered here because it crossed previous day low, and we were able to get 5% move in the stock. Similarly, in NHPC, we were able to get 5% move in the stock. Hindustan Construction, we actually lost money in this because although we entered here, the stock actually reversed and we had to shed 3% as a stop loss in this particular trade. Combination scan 4, again on the short side, crossing weekly low, CCI crossing from below, RSI crossed below, and aggressive new shorts in the market. There our success rate has been 50%, but we have been able to get some 5% moves in this model, although there have been some trades which had almost 3% losses. This PPT is anyways available to you to get a better understanding of all these trades we have initiated for ourselves. Good point is that not many stocks come, and out of those limited stocks, only few stocks will actually trigger your trade. But once they trigger, the probability of success of those trades is actually very high. We also have this intraday, because there are certain people who have asked for intraday trades from us. Just giving you a perspective. We are not saying that this is the way you should trade, but just giving you a perspective. Before I actually start taking question and answers from you guys, this is the last section which I wanted to touch on. How do you trade intraday using stockage? Although stockage is not for intraday screening, but the output which stockage is producing on EOD basis can also be used for intraday trading. And how do you do that? So like for example, we have given you this short stock identification, close within 52-week low zone, RSI crossing below 30, and aggressive new short position. Now if you identify stocks out of it, what you need to do is, when 15 minutes, first 15 minutes candle becomes a very important benchmark to see whether there will be sustainable movement in that stock for the day. The moment first 15 minutes candle high or low is breached, you can initiate a trade with a target of 1.5% and stop loss of almost 1%. For example, in this, let me show you, on 5th of June, we got this trade, 5th of June, this is the time when we initiated the trade. So these are all 15 minutes candles. So 5th of June, this is the first 15 minutes candle. This is the low of the candle. This is high of the candle. Because the stock was on the short side, we were waiting for this low to get breached. The moment this low got breached, we went short this trade with a take profit of 1.5%. We actually got the 1.5% here and we exited the position. Let's see the next one. This is the stock called ONGC on 21st of June. The entry price was 162.20, again on the short side. The first 15 minutes candle. Okay, this is the moment this is breached, we went short here with a target of again 1.5%. So the idea is that once a stock is getting reflected in stockage, there is a propensity of that stock continuing with that trend very aggressively. So the moment first 15-minute candle is gone, and if the stock is showing a negative trend in the next 15-minute candle, we go short here with a target of 1.5% and a stop loss of around 1%. Motherson Sumi, we tried the same thing. We entered, but it reversed, and there was a stop loss of 1%, which got hit. L&T Finance, we tried the same thing. It worked with a profit of 1.5%. UPL, we tried the same thing. It worked with a profit of 1.5%. PVR, we tried the same thing, but it did not work. However, we were able to exit the position with a stop loss of 1%. Sun TV, the trade did not get initiated because we got the output on the short side, but the low did not get breached, so the trade did not get initiated. Right? So this is just an indicative couple of systems which we have shared with you. I am expecting you guys should develop your own system. You should create your own simple candlestick based entry exit strategy and religiously follow that strategy, and just limit yourself to only the strategies which you have designed for yourself. Please do not listen to what other people are saying. Please do not solicit tips from other people. Do what works for you and keep on consistently doing that. You will definitely for sure make money by believing in your own ability rather than just soliciting ideas from other people. And Stockage is definitely there to help you to create such kind of outputs, and you become a excellent trader or excellent money manager of your trades in the market. All right. Now I will take questions because I have been speaking for almost 3 hours now, and I will take questions. I will start from the starting. In case I miss question, because I'm going to have this session for around 20 minutes. In case I miss any question, do not worry. You are most free to send us emails. We will reply back to your questions to the best of our ability. If you want to create that Excel sheet of your stock, and if you want to send it to me for any kind of value addition comment, or if you are unable to understand, do your homework first. If you are still stuck somewhere, not necessarily that you will be able to understand or you will be able to draw an output for each and every stock, but do your homework, and in case you are still stuck, do get back to us. Send us an email with that Excel, and I will try to give you my best advice or output if I am able to understand the functioning of that stock. Okay, so I'm taking the questions from the starting, from the time when we started. Okay, and no, so I'm going to take questions from the starting. Okay, so Tuhin has asked how to become a good options trader using Stockage app. What will the best algorithm? What are the best parameters on sequential basis? Thank you. So Tuhin, as far as identifying a stock trend is concerned from Stockage app, I've shown you the process. But for becoming an options trader, you need to understand the Greeks like delta, theta, vega, and gamma positions. Please do not, I am requesting, I'm begging in front of all of you, do not sell options. This is very, very lethal. Only sell options if you want to understand, if you want to take delta, if you want to take theta, if you want to play on the volatility curve. Otherwise, it's very, very dangerous. So if at all you have to devise a good trading strategy for yourself, please understand all these three gates before you can start taking a delta call or a theta call or a vega call in the market. Okay. Sanjay, commodity trading will be not for 24 hours. It will be only for 11 hours. Okay, I'm going to skip all these questions. I think initially we had more of casual chit chat discussions. Okay. There are some questions which I've already answered. Yeah, Fibonacci for intraday, brilliant, Shiva. You should. It works. Please explain a little bit of Fibonacci. Fibonacci, I can, but there are enough resources. You can also go to blogs.elonmarquez.com. We also give a lot of free material, reading material there. So make sure that you are blog.elon. Free, absolutely free. Use it to your advantage and make sure you read. Tuhin, you're asking me a question with respect to Bajaj Finance. I'm sorry, I can't answer that specific stock specific question until I've done my Excel sheet on that Bajaj Finance. Okay. I'm just trying to see the right question which has to be answered. Okay. Praveen, you are asking 89 moving average cause its Fibonacci number. Yes, Praveen, absolutely correct. You are bang on target. How to set stop loss in options or derivative position? I think we have discussed that the stop loss can be an absolute number or it can be actually low or high of previous 5 minutes or 15 minutes or 30 minutes candles. Because that's the place where typically algos keep their stop loss. So you start thinking like an algo what they are thinking and kind of start outsmarting them by putting the margin of safety in the stop loss. Okay. Gautam is asking me to analyze and discuss Ashok Leyland and India Bulls using sentiment and fund. Gautam, you make that Excel sheet of Ashok Leyland and India Bulls and share with me, and then we'll discuss on a one-to-one basis or over an email. Okay, I've already discussed put call ratio. Sher Khan has derivative kit. Sumit, now you realize that you use their kit as well. I'm not denying it because everyone is trying to add value to your life. But make this Excel because this will give you a good discipline, good propensity to work hard. Okay, if FF hard copy we don't get delivery, I've already talked about it. Okay, how do you guys? Okay, we already discussed about it. Is there any sucker indicator for analyzing these bow data? Is there any sucker indicator for analyzing? I didn't get the sucker indicator. Bhupendra, you need to elaborate this question. Okay, there are some people who are asking me to repeat. Anyway, this video is available to you, so do have a look, and you are most open to send an email to us. We'll try to reply. If OI increasing, then it satisfies one. Okay. Is Stockage app support the scan or price delivery OI altogether? Yes, the combination scan is there. But combination, you will have to subscribe to our premium service, which is only 400 rupees per month. It is so reasonably cost. I fail to understand why people will not subscribe to it. It's such a beautiful tool. Or you can become part of our elite Stockage club, which will give you access to all this learning content, access to us on a real-time basis. So I will seriously recommend people who are not club members to become part of this club and become part of this superb association which we are building for all of you. Anand Prasad is asking, this discussion of OI is based on daily trades. How to get a handle on weekly and monthly or cumulative OI? I may that one may close position and open the same next month. How to interpret OI over a period of 3 months? Can you allocate relation of volume OI and cumulative OI or VAP as any role? How do I think, Anand? I did exactly the same thing in Excel. Where if you see Tata Motor example, I've taken the OI from compared with April OI and compare it with July, what is happening. So if you see last 2-3 months, the OI short side has been there and consistently been there. Only in July the OI has gone down. That means shorts have covered their position. So that's how it is giving us an indication that probably 250 can be a new base for Tata Motors. Okay, can delivery be for short position? No, it cannot be. Sir, in case of Nifty, highest call OI and highest move, we think see, Nifty is a very, very managed instrument, very complex. You can look at the max pain theory there, but you have to revisit your analytics on an intraday basis. And my dear friends, let me throw a caveat that open interest change on the intraday basis may not be an accurate data, because lot of these guys, lot of custodians who clear the trades of FPI, they may not be updating their OI positions on a real-time basis. Anyways, exchanges give the OI not on a real time. I think it's 3 minutes or 5 minutes delayed. Still, the OI in the hard copy can be different from the OI in the screen. So any judgment based on an intraday OI is prone to risk, but that's okay. You can still make a logical assessment of that risk and trade accordingly. Okay, rollover statistics. Yeah, I mean, I look at the absolute number. I don't look at the percentage. So if you see, out of the 6 crore shares, 7 crore 50 lakh shares were carried forward. So essentially, the cumulative OI itself is a good indication of how the rollover is happening. What are the standard put call numbers? Paramjit, standard कुछ नहीं है. Put call ratio में जितना ज़्यादा put में position होगा उतना aggressive share short से put पे. So anything above 2 is an aggressive number. If it is more than 5, it's a really, really aggressive number. But consolidated basis पे anything above 2 is a pretty good number. How to use VIX? Parth, and my apology that VIX is not something which we want to discuss today. But what I can suggest to you is VIX graph. Do technicals on VIX and try to figure out the bottom formations in VIX. Because at times when the VIX is getting bottomed out, market is prone to reaction. Typically the reaction is on the negative side, but we have seen in Indian market at times the reaction is also on the positive side, because there is too much of domestic liquidity inflow. So your reaction may not be necessarily on the negative side of the market. Yeah, we will share this Excel sheet, Shivkash. Praveen, please see this video again, Praveen. I'm sure that you will be able to understand. If not, we are definitely there to help you. It's not that this 3 hours is the end. We want to give you as much of value as possible, because our philosophy in Credent Info Edge with Elon Market Stockage is affordable learning, affordable analytics, and we are not here for short term. So please come back to us if you still have queries, and we'll definitely try to revert. Okay. Okay. Tata Motor open interest options just taken from Bhav Copy. Xavier, we have taken for Bhav Copy. I showed to you how you download the Bhav Copy for the day, and then thereafter, once you download it, you can filter only Tata Motor options and then copy paste it in your Excel. Once you look at this video again, you'll be able to understand. Sumit, option data trustworthy at a consolidated level? Yes, but not at a strike price level. At times it becomes difficult, but at a consolidated level, yes, it is trustworthy. Gautam is asking, please throw light on the subject that is intended to option analysis and identification of trend. I think that is what we did. In option chain, can we know if big people are buyer in any option? For example, 31st May bank expiry call. No, in option chain, you can only know if big people are buyer if there is increase in open interest. You really can't gauge. Just like in cash market, you have bulk deal, block deals. In options or derivatives, you don't have such disclosure of deals. So if there is increase in open interest, that means there are bigger buyers who have taken position in that stock. Generally, it's on the selling side, but on the buying side, it has to be on a case-to-case basis. Very difficult to judge. Option chain analysis. Gautam, I don't think so. There was an intent of discussing option chain analysis and identification of stock trend. The intent of today's session was derivative data analytics and how to identify a stock trend, which I believe would have been taken care of. If you have any specific requirement, do definitely send us an email. We'll look into it. Okay. We are looking 1D candlestick in stockage. It requires for intraday. I mean, you can look at other websites which are giving you intraday for technical buying, technical support and resistances. Right now we have 1 day. Intraday is there, but it's 15 minutes delay. But still, you get a candle. But intraday candle is only line chart. It's not a candle. So yeah, you can resort to other websites. Okay. Yeah, Bloomberg Trender is superb. I've been a Bloomberg user for 15 years, and I definitely would recommend Bloomberg Trender. But they said they're a proprietary tool, and I don't think so. We can host it in our app, but we are trying to develop new things. We are trying to develop our own proprietary stuffs. So let's see if we can do that as per your suggestion. So for doing swing trade, which time frame should we look at? I think more than time frame, you should look at the price targets and the stop loss, because time may extend to 2, 3, 4, 5 days, but obviously it should not extend more than 5 to 6 days. But if you have clear price targets in mind, I think you should resort to that specific price as a stop loss and take profit. 69 EMA can help to identify swing trade. It can. So you combine 69 EMA or any EMA with some kind of an indicator in combination, scan and try. Can we use support and resistance method after identifying the stock in stockage? Yes, you can. How is Rodha? I am not the right person to reply to that question. Yes, the Excel sheet will be shared with you. Today, and let's see. Okay, Gautam, disappointed. I can just take just a minute to understand the trend from. Okay. So that's fine, Gautam. That's okay. We can't. At times it happens, so that's okay. If you are not satisfied with the value addition which I have given to you, that's okay. All I can say is that I will try next time. Blended technical with derivative data. Yes. If we are swing trading index futures on hourly time frame, how we do best determine the real changes in future as well as options. Tara Excel sheet will be same as share with us for learning properly. Yes, correct. Okay, so let's do something. I think a lot of you would like to create your own Excel and get back to us with your queries on that Excel and try to figure out things which you can do on your own. And if you still have any question which is pending, which we need to get back, we need to come back to you with the right knowledge sharing. Please send us an email. We will for sure revert back, and you send me an Excel. So before you actually send me a query with respect to any stock, you will have to send me the Excel. If you don't make an Excel and send me an open-ended query, I don't think so I can entertain that kind of a question. You can ask me conceptual questions which is not clear after you have watched this video multiple times. But still, if you are stuck somewhere, please send us an email. We'll definitely make sure that we will reply back to your outstanding queries, if any. So let's close this. I think we are right on time. We are concluding at 7 o'clock. We started at 4. Thanks a lot for attending this program. It was as much fun sharing my experience with all of you as much I'm sure that you would have learned from us. I'm sure that all of you would have received some value addition from me. Yes, some people definitely would have expected more. That gives me enough reason to work harder and give more value to people in large in society. So please remain connected with us. This is not the only thing which we are doing. We want to do much more. Give a suggestion so that we improve, and please fill up this feedback form, and we will definitely revert back with more productive sessions like these and develop more tools for you so that you become a better trader and better investor in the market. Thank you. Bye-bye.